Excuse me, man. Goodness gracious. Oh boy. What doing, Buxy? Done. And done again. Hello. I'm still in LGMK. Yeah, I'm still in that chart. Ooh, Tesla's still running. Starbucks trying. AMD's going, man. I didn't get into AMD, and I really wish I had, because I knew back here at like $84 it was going to break out and go. And it's just one of those things. It was too much on my plate at the time to like mess with it. It's super messy now, too. I think I need to like delete these, reset this chart. Yeah. Yeah, it's a bummer because I had like a buy line right here and then I just didn't buy. I think what it was I went up here and I was expecting it to come back down on AMD and it just never did. It never like got really close because usually if this triggers, it goes away. But I think I just missed it by like 50 cents. Pretty annoyed. AMD is still a really good trade, but it's currently really overbought. It's on the 4 hour, it's really overbought. So this is a really easy trade because of the massive, kind of obvious wedge. So it's a funnel, you know what I mean? But like, it's really simple. So if this continues the way you would think it would, it's probably going to come back and find the beginning here. So it's going to come back to 140. So it's still a good trade. It's not done yet. I will say that on the whole, it's really overbought, so it's hard to say. May not be the best thing right now. I haven't looked at this in a minute. I meant to look at LGMK, but I stopped short of it. Here, I'm just going to make a mark here and see where that is. Yeah, I mean, it's pretty close. I don't know if it's going to do that in like a day, but that seems a little crazy. It's like 2 days. I don't think that's going to happen. I mean, if you lower this, it changes the target a bit. So probably the best practice here would be to use where the support was found, which is right there. Not that little middle area. So that's 140.80. That seems about right. It looks okay. And that actually looks like next Monday or Tuesday. Again, I'm not saying that that's probably what happens here. That seems a little out there. There's a lot of resistance levels between here and there. But yeah, you probably could do like a fib and just see where they're going to go with it. So like 140.81. See what that is. So I wouldn't count on the timing of that, but this still has another $30 in my opinion. That's a big move. But like I said, right now it just broke out and I don't think it's very likely, at least in my opinion, I don't think it's very likely it's going to keep running until without any backups at all. It just seems really unusual. Even back here when it had a pretty big run long term, has some decently large backups. So if this is a 1, 2, 3, we could do that as well, but good to know where the levels are. So 124 is like a maybe, and I would say that looks about right. So being about right around there, right here where that gap zone is, right at the gap actually looks pretty good. And then kind of where it's at now, this is another one right here. So, and then the backup looks like it goes down to 103, which is where that gap is. And then even here, this is a 618 level. So there's another one I would say is pretty good. Yeah, all these look fine. They're all kind of in the right spot, which tells me that the target that I picked is probably a good target. But yeah, those are all good targets. So resistances and supports. Man, really bummed out that I missed that bottom. I feel like I saw that coming and I just didn't trade it. The other thing to consider here is like, I'm not a huge proponent that everything has to be symmetrical, but I would have probably looked back at this and said, does this match the breakout target? And if it does, or it's close to it, and I think it probably does here, that measurement, and then even going back to the bottom, seeing if that matches, it currently does. So it was a good chance that it was going to break out according to that first move, just based on symmetry. So I don't think it's, again, a good idea to necessarily buy this when it's overbought. But if it has a decent pullback, in the past it's come back down to like the 50 during this uptrend. So it wouldn't be a bad idea to maybe do an alert here if it comes back down to like 50 to take a look at this again. And then maybe trade it, I don't know how far this goes. It's also kind of at a spot where there's another widening here. So you can see this one that's smaller, kind of built out again. Secondary widening right there. So this may be in a bad spot to like, again, just jump in and trade. It may have a resistance right overhead. So we'll see. That would make sense to me because it's been running really hard. So maybe pulls back. It doesn't even have to be that long-winded, but it is if it's a 1, 2, 3, 4, 5 ends up doing that, it'd have to have an extended 5. 1 is already smaller than 3, so there's not much to say about that right now. Oh, that's not what I wanted. Wrong thing. So 3 just can't be the smallest. It can be kind of weak. Usually 3 goes to at least this 1,272, which is right where it's about to be. It can go on average, it usually goes here. And then there's kind of a blocked area of like, once you hit kind of the average, this is sort of the range that you look at as likely. Like that. So those are likely targets for that extension. So this is like a lower target. In reality, because this is so steep, could it possibly have a pullback like by Friday? I mean, it could. It could hit that first target, pull back by Friday, and then continue the same wave. It doesn't have to like break down. So it may still have like another jump in it going into next week. So again, if this comes back down, I'm not saying it will, not guaranteeing anything here, These can have obviously pretty big extensions. I'm just looking at the past and I'm like, all right, once it's gotten up to being overbought, does AMD typically continue to run? Maybe a little bit, but not much. Even in these really bullish trends when it was above this 180, didn't stop here. This would be an example of one where it kind of like hits and then it chops higher continuously. But still, had you waited for that drop back beneath, roughly the 50 to 52 mark, it would have been a much better buy. These pullbacks are pretty straightforward. So patience. This one might pay off really well if we're patient with it. So you could have an extension that goes up 123. You could stop short at like 116, 115. And then I think if this comes back down to like the 50, it's probably a really good buy opportunity for AMD, especially if it stays above that moving average. But anywho, so SPY continued to run. It's like keeps going. Bet you're kicking yourself, Booksy. No, I'm not. I mean, part of me always wonders, if it's going to just keep going when you look at stuff like this. I like to trade with the 4 hour. So for me, it's not a question of like, will it pull back? It's just when. And I don't really worry too much if this is not perfect. I had a few different targets in mind anyways. We had some lower and some higher ones. And I actually had bought 595s because there was a level that had presented itself from the end of February right here that was like the 595 range. And I thought maybe it goes all the way there. So when I bought them, I bought 595s. But I didn't want to continue to trade after it got overbought. So for me, it was like pretty much a no-brainer. Like just wait and see what happens after it goes up. So I think the same thing right now is like you could probably trade this in much the same way. Just to be really brief about it, I'm not going to look at SPY very much today. This might be it for now. But yeah, I think you could probably trade it in much the same way. It looks like after it kind of finishes, it goes back to like the 50, and then it might continue. So on the RSI, that is. So I think there's a good chance that I'm trying to get this thing to create an alert, but it's not showing up. That's not good. It's broken. Well, maybe it's just not showing up for some odd reason. I don't know why it's not showing up. But it doesn't seem to be showing up. Trading views busted. Oh, it's not coming back. It's going to just keep going. Well, I mean, look, the S&P 500 is an ETF. So if the market rallies, it can continue to run pretty hard. But again, I'm just kind of looking at this like much the same way I would something else. So same deal. I think I'm going to like just kind of as a general form of guidance for myself, just kind of wait and see if it has a pullback to about that 50. So most of those run-ups, it comes back, the RSI still comes back down, even in a bull trend. That being said, there was a narrowing going on, and we kind of broke upward, in my opinion, on that narrowing. So it was like a wedge, and we broke up. That's kind of unusual. It can signify one of two things. So in an S-curve, sometimes the wedge is in the middle. We've seen that before, and it's commonly like in the center of like a 50%. Not really seeing that here, but if that were the case, then you might even say it's only halfway done. But most of the time, if that wedge breaks out, it's kind of like a double flush moment. So there's two ways maybe to interpret it. You could do it like this, the way I drew it this way, where this is already down and then it's back up. So it actually broke down on RSI and then came back up, and it's like a hook. And that's what I had said earlier, because if you recall, I was saying that I thought this comes down and then it goes back up for like a final push. That's the reason why I was still bullish last week and thinking it might pop again. And then this would be like a kind of a unique situation where it's hooking, but it's doing it beneath. I think the volume largely supports that idea. The volume's still kind of weak. I mean, this isn't really the kind of bull run volume that you'd expect. A lot of this is probably, the bottom is there, has the volume, but the rest of it looks pretty average. Maybe slightly elevated, in this time of uncertainty, but looking back, it looks pretty average. So I would suggest that that's mostly still short covering from like this big drop period, which makes sense. So this is like on an extended squeeze. We could do the same thing with like fib extensions. I don't want to go like too crazy on this stuff because I think you can get, oops, wrong one. Keep doing the wrong thing. Thought I still had that thing pulled up, but I guess not. I was on the other chart. So I don't want to go too crazy with fib extensions because sometimes people get really obsessed with the idea that it has to go to this 1618. And it does often get there, just depending on how this is set up. 1618 is new all-time highs. I think it can get there, but I'm not convinced it does it without any breaks. I mean, that would be kind of wild if it just popped up there next week. Just like I was talking about AMD, it's kind of crazy if that happens. I think that'd be a little bit bonkers. It would be like a squeeze, having to squeeze through this 595 range up to 609. Long term, does this make sense? Yes, because there's this long-term trend that we lost, and we didn't actually go back and check it, and it's roughly near the top. It's at like 613. So like it would make sense to me if this did go back and test it. Again, I'm not saying that it's going to necessarily break down into a wave 4 right away. That was certainly a possibility, and it's still there. But I do think that it's reasonable to expect there could be some chill out period here. So this S-curve is finished. Like we're done with that. That target hit. I'm going to go ahead and remove the Gann chart, not use that anymore. Everything else was fairly textbook. I didn't really see anything that was too crazy. It was really easy to trade this, in my opinion. There wasn't much to it. It was like you knew the backup where it was going to be, and then you just traded it. So this wedge on the price action, though, is kind of curious. It's starting to look more like a parabola in some ways. So this is approaching like the first cross right here. That'll be an interesting test to see if it can get across it. If it cannot, it's going to retreat backwards to a support, and I don't know exactly where it's going to go, but there's one at 580, which we were just at. It's about $8 away, and then the next one's kind of low. It'd be back down here to this top at 574, so that's about $10 away. A little more than $10. And that makes sense to me because that is the floor. I mean, for most intents and purposes, this area right here was the support that was lost. And yeah, it does vary. You can see there's a few different hits. It looks heavier at 580 to me than it does at 575. Like there's more interesting things going on maybe at 580 back here in terms of support. But 575 was a resistance, so you need to kind of go back and check that as support. So because this didn't get stuck beneath it, right, which is kind of what this model was, and again, I'm not going to spend a whole lot of time on the S&P 500. I just want to kind of elaborate on this a little bit. Because it didn't get stuck beneath it, it's a fair assumption to say that this, extension here, and frankly, it looks like that S-curve is going even higher than I had it drawn out, but maybe even I had it here. Maybe you could even put it up on the next ledge and say it's going to go to 605, because it's reasonable. It'd just be crazy extended. Pretty wild if it does that, right? I wouldn't chase it unless you're just kind of, again, playing those stops, and that's just my opinion. And I don't know what I'm going to do. Might play one more if it decides to continue. It doesn't seem like a horrible idea because if this ends up being the middle, then it's a 607 middle, which is kind of crazy. If this ended up being the middle, which we already used, then it's essentially done. So the 583 was the first middle. So really it's a kind of a strange check here, but I would suggest that maybe we use this instead. So I got rid of that Gann box. So that's a possibility that this could be the one and the second one and then 2, the jump. So this is 1, 2, and then 3, 4, and then the extension would actually go up quite far. You do have a gap away on either side. It's quite a big move, so I don't know what that is right there. That's 605. Yeah, so that's like the tippy top of that widening, which I guess makes sense. I mean, I didn't use that, frankly, but that would make sense because usually you return back to the top of the widening. So I mean, it may go all the way to 605. In fact, I'm so like enamored by that now. I might even consider like a last minute. I just wish it would pull back one more time, but I guess you can't win them all. That terminates on Friday the 16th. So I mean, if it continues to 600 by Friday, I definitely would not hold it. to be like really pushing your luck. But yeah, I mean, that's not very far away. It's like $12, so I guess it's not a big deal now. You're like, yeah, it is still a big deal. Yeah, I mean, you just got to be careful. This isn't one that I would spend a bunch of money on, you know. I already made a good chunk of change on it, and I didn't hold through the next bits, and I'm not regretting that. I'm just looking at the chart, and I'm suggesting that, you know, where this is, that extension actually makes sense because of the widening. So it just, the thing is about this type of targeting is that hang on. Yeah. But I think that I don't know. What was I saying? So the Fidelity was asking me my opinion about their site, and they apparently had an outage. It wasn't like an outage, it was like people couldn't log in yesterday or something. And so people were all angry. And I don't know. It didn't happen to me, and I don't know what was the I don't know what the deal was, but a lot of people apparently couldn't log in. Looks like the 1414 is 607, and then 596 is 1272. It does seem pretty unlikely it just stops right now. But anywho, I was saying that like the thing about fib extensions is they don't really have to go there like at any particular time. So you can find a really good fib extension, but it doesn't mean it has to hit here now. I mean, it could kind of back up for a bit and then go up again. It just depends on if this is like a wave 3, for example, then you wouldn't want to see a breakdown of that wave. So reasonably speaking, you know, is it going to hold this trend right here? So there is a potential that this could take till May 22nd. You know, if you look at the third wave as like, okay, it's a series of, and I think it's probably pretty accurate. I mean, it's tough to say. The top of this is actually quite flat, so this trend could be kind of flat. This seems like a pretty hot zone, but I gotta just take into consideration the possibility that this is actually quite flat, and it looks like the exact same as the bottom. So really, this could actually pull back and still be part of that wave, and it wouldn't be a breakdown. It'd just be like an bleh. So the longest this could take is like June 3rd or 4th. So that'd be kind of far out there. But that'd be safer than trying to say it's going to go tomorrow or something. Maybe the 6th. It hits 600. Those are probably going to be super expensive right now. So like, I don't know if you're going to be able to even bother. Most of you probably wouldn't be able to bother trading them anyways. Like, I'm talking about the, I bet they're like $10 a piece. The contracts. That'd be easily $10 a piece. Let's check them out. Let's do a 600 strike for June 6th. Oh, they're not that bad. They're 400 a piece. I mean, it could have been way worse. I was expecting them to be way, way more expensive. I mean, you could take a chance that it's going to pop tomorrow or something if it holds a certain level. I know it's above the 200 on the daily, which is pretty bullish. So But I don't know. That's kind of expensive for my blood. So I don't know. Like if I had 10 grand, I probably wouldn't mind throwing like 10 grand to trade actively right now. I probably wouldn't mind throwing $400 at it, but like that's, you know, 5% of your portfolio, right? So like that wouldn't be a big deal. But if you're only trading with a few grand at a time, that's quite a big chunk. So this is like a halfway there kind of thing. You know, it's probably going to go up, but there could be a period of pullbacks, and it's already overbought. And that's what I'm trying to say. Like, I don't really think that this is necessarily the best entry point. It's hard to say. Could it keep going? Sure. Could it just keep going up into Friday this week? Sure. But, you know, it could take a breather for a whole week, and then you'd be screwed. So I guess it just depends on like your risk tolerance and like what you're willing to sit through. I'm probably not going to trade that. AMD doesn't look bad to me though, like a long-term trade on this one. I feel like this is probably a pretty easy one to trade because sort of like what we just saw on SPY, it is very easy to identify beginning to this, which is back at 142. And even before then, maybe even trading to this gap at 166, but I'm specifically looking at that 142 because the widening here, it would be a logical place to have that finish and go check that creek and kind of satisfy a lot of the triangulation measures. But I also would want to caution that if the goal is just check the creek, any of these are fine. Like we were looking at these extensions, and those are very long-winded. Like that could not potentially, you know, hit that extension. Obviously within reason, you have to kind of use your brain. But it's just a comparable thing. That's why I'm talking about it in relationship to what we just saw. So even the widest trend here isn't super wide. So that's kind of nice. Well, this doesn't give you a huge amount of time on this to interpret like a lot of different motions. It'd be kind of easy to see if it breaks down. You just wouldn't want to trade through the breakdown. So yeah, if it does extend up and hit now, I think it'd be the top of the channel. This could kind of resonate across the market. We might see something very similar. Usually we don't spend that much time on a low, and then you can see how overbought it is, you know, already on the hourly. It really looks like it's got to pull back, but it's strange if that's the channel. If that ends up being the channel, then it's been on the lows of the channel for a long time. So it does look right though. That's the same marker, the same angle. So this isn't something I would normally do unless I was sure about where it is. And in this case, we have a breakout right here. So I think it's pretty easy to tell that that's the middle of that channel. And so it would be simple enough to kind of take that and just draw through and see where that is. And that is accurate. So it's sitting on the midline right now. If it crosses up on the midline, it might just go all the way, which is what it's trying to do, I think. Although it's doing it while it's very overbought. If it pulls back, again, seems pretty simple to me. Like it's probably going to come back and test this breakout, maybe even lose it for a second and then re-break, perhaps even into Monday. But what I was really curious is there an obvious kind of cross on here, and it's way off. So that's what I was wondering. That would have been like here. So it did not follow through on the wave. We could use what's already there. There seems to be an evident trend here, which is extremely weak. So instead of using the middle, just use what's kind of evident. And there is one right here. It cuts through it, so. Yeah, that one's all right. it's like it tried to grab it and didn't succeed, and then it ended up staying kind of low longer. So this actually doesn't make, this makes makes good sense, because this is suggesting you don't go to 140 until June 2nd, which is very similar to what we just saw on SPY. So there's a similarity here in some of these bigger stocks that tech stocks maybe, that you have maybe early June as a stopping point instead of now. But that's also at the top of the wave. So if we were to do a 5 wave, for example, and just an easy way to do that is use the measurement tool, or just use a simple box to measure wave 1. Oof. Yep. So like you see that extension right there, it is a breakout on that bigger creek, or at least a check of it, and it is check 140, which we were thinking it would come up there and hit it. So it checks it and goes through it. It actually goes up to 147. Yeah, that makes, yep, that's a sensible level. It was like, it should be a major support level, and it is right there. So this does follow through, but the problem is that 5th wave is really like 115 all the way up to 147, and you can see that the 3rd wave potentially then is very close to done. If it went up again, even if it went like almost all the way, you could have a really long, you could go to that 1618, right? Like the 123 marker, and that doesn't actually hit the top of the channel, and that it hits this angle, which actually makes sense. That would be Friday, which also supports the idea that SPY might continue to run through Friday. It might hit 123 and then back up. And it's just, then it's a long wait, because it's from the 16th all the way through June 2nd. It's like 2 weeks of potential sideways. And then you have, if you're fortunate, you can have another wave here. And I don't know exactly how that works out, but that would be where it would be roughly. So it'd probably end up coming back down and chopping here and then breaking out, you know what I mean? Late in the game. So your wave 4 is kind of boring sideways for about a week or so. That's assuming, or excuse me, that is assuming that this is a 5 wave. That actually works really well. 1618, and then it backs up a bit. Usually there's a 382 retracement on it, but yeah, and there's a 236 retracement, so it's a shallow retracement if it does that. And that's just off the top. This could have a pretty deep retracement. It could come all the way back down to 106, but then that means that the 5th wave has to be longer, or it's not going to get there. Or maybe that's not in the design here, you know. This could change the angle. If it hits top here, you could have like a lower angle and then sort of start rounding off. But regardless, maybe 106 and then it goes up. That would be like the same thing. So if it has like a deeper retracement, then it goes up, it hits this top instead. And it doesn't ever get to, probably gets close to 140. That's about the same move. So that works. Anyways, so you might get a little more extra headwind here on AMD, maybe up to 120. And then I think it's done. And I'm saying that like cautiously, because I do think there's probably going to be some of these dips like these guys intraday. You're going to have like bigger dips that pull back and then go. So it would make sense to me that there would be a few of those. So you might still have like one more good one, especially right here at 115. Pop up and then drop hard. Catch this bottom right where we're at, 111, and then go one more big extension up, maybe into Friday. So what's going on with AMC today is that you have a whole lot of nothing. There is a confusing kind of pattern that's appeared. And it's confusing for like a couple reasons. I'm going to poke my head at the at this other Logimark. Palantir's just tearing. It's just hauling butt. It went way back up. So it's going towards that initial target at like 130. I think this is where I did the chart. I'm not sure. I don't know. I got a lot of diagrams here. This is an older chart. But ended up being kind of right. Is it? Well, yeah. I mean, it did take a longer route to get there. It definitely went down. But in terms of like where was the target level, we knew where that was early on. This is not the latest chart, but it was right there. And then I knew that it would come across this red line and distribute. And that's almost exactly what happened here. It just did it like way, way later. So if you had been... Actually, it's not that bad. It looks like a long time, but it's actually not that bad. It's only like a week and a half later. Yeah, so if you had like doubled the value, you'd been fine. But then again, it's come back down. So the rest of this is sort of self-explanatory, but we can look real quickly. Again, I'm looking at this because I was asked to look at it, and I have interest in it. I'm in the play. I don't particularly love that move. What am I doing with this? Why did I do that? I think I was comparing it. I must have been comparing it to a previous breakdown. Yeah, I think I was using like a larger structure. So that's like, and we're going to do that on AMC today. We're using a larger structure to inform what we're seeing on a smaller scale. And that is what we saw on the larger structure as it came back to that mark. Beyond that, there's unfortunately not very much to, I think, be really, really bullish about. You have to have now unfortunately, usually you have to have like a kind of a retracement. So it could keep going, you know. This is not like a surefire, like it's got to come down and fill that space right now. And sometimes we don't do it because we're going to go all the way up and get overbought first. This is the 4 hour. So there's certainly a possibility that this could have another go at 2 cents, right? 0.027 or something like that before it tries to come back down. I see this as kind of like an auto reaction phase B, but it's hard to say that this isn't all part of an auto reaction. The only reason I say that is because once it bounced, it didn't come low again. So it broke out here later and then ran up really hard. So there's nothing else really here to go off of, is what I'm trying to say. This is the creek that it's on, and it's kind of right underneath it. It's just sort of sitting there. Yeah, this is a tough one. It reminds me of distribution because of the way this is sinking lower and is creating these like tops, and it's not really advancing, but it did this similar kind of pattern right here where it like advanced and then it backed up a bit and it bounced out and then it ran again. So there's a decent chance that this could provide us like a support, maybe even a double bottom support. And then I would be watching carefully the break here. I think if you get a break on RSI, it's going to correlate to a break on that creek. And if you don't, then it's probably going to come back down pretty quickly to 1 cent again. And maybe you can try again here. But once you get to that point, it's like, who knows? That's earnings right there. That's on May 15th. So it's kind of a make or break moment. I got to be honest, I don't really see the harm if you want to try to trade it and you don't mind throwing some money at it that you could potentially lose, because there's a decent chance if it does run, it's going to move pretty far. But I got to say, like, just again, from the get-go, that the way this looks to me, it looks like the kind of play that would, and I don't know what happens on earnings for this particular ticker, but it just looks like the kind of move that would have that double bottom right now, because it's missing this check. That's right about where earnings is. So it would make sense to have that drop into earnings. If it breaks down, it's just going to go back for that 008 gap fill, probably. And it could be a combination of these with like a head fake and a drop, or a drop and a pump. But I think at that point, you're going to test this particular bottom. So short term, it's fairly straightforward. And then if it goes up, I would say that it's a sell if it hits near the top. I wouldn't even suggest it goes all the way. A lot of times you can see on these pumps, when the stock is so weak, it just won't even get up past like 60. So I would suggest that once it passes this zone and gets above 60 to 61 on the RSI on like 4 hour, for example, that's probably a decent place to consider exiting. Because again, a lot of the times this doesn't even go all the way to being overbought. There's a similar kind of setup right here that happened around earnings. I mean, again, you could draw the comparisons wherever you want. But that's one that I could look at and say, well, here's an example where it did go up. Yeah, but then for every one of those, there's also one where it just doesn't. It's doing these like pops and these fake outs. It's not really moving. So do I think it could be similar to this where it's like pushed up and now it's building sideways into earnings and then it has a big run up? Yeah, perhaps. There's not really a great way to identify where it goes. If it's already hit the intended target, then we don't really have a good one. I would look back at this dump. So probably what I would do is something similar here, like support and then resistance, and suggest that maybe if it makes this run up, it goes all the way up to 0.05, you know, which is a big run up. So proportionally, that's pretty huge. That's like 200%. And that's where the gap is. So it's possible that that's the intended target if it runs up. I just don't, this is a tough one. It's not really clear to me. I don't know what would happen after that, if it would just keep running or what. Does it go back up to check this creek and then it's a much bigger run? You know, it's huge if it does that. There's another one, although I didn't draw them all. There is another one like right here. In fact, that might even be what's being looked at right now. It's probably like a series of tops. Each of those tops would be like a fan blade. Yeah. So there's going to be some heavy resistance right in this pocket. So more than likely, that's not going to just be breached overnight. So let's talk real quick. FNGR. Let's just look at it. You know, I was thinking about it yesterday and I was like, why did I not want to look at it? And I don't really have a reason. I just didn't. And I think part of it was because it was already moving. Like I had seen the messages and it had just been like squeezing for a while, right? I think someone had mentioned it before then. And if I had seen it before then and taken a look at it, we probably would have been like, yeah, this is good. But sometimes like after the stock starts moving, I'm just like, meh, it's not one that I got, so I'm just not interested. But that's not really fair, because if you're saying fan is kind of a bad word in my book, but like if you're a fan of the channel and you like the content, then and you like my opinion about it and you want my opinion about it, like I should be willing to, you know, take a look and give you my opinion about it. So there's a lot going on here. This is a kind of a messy top. It's messy because it doesn't line up. So like all three of these are at slightly different, almost looks like a curve as opposed to like an actual, like this is like a curve that was trying to be, so instead of it being like an actual flat topped area, it's a little bit of a mess. It's all three of these angles, 1, 2, 1, 2, really any of them that you draw, they're all kind of off. But that one looks pretty good, and I think there's an intersection it's about to hit. So I'm not saying you should get out, but it is at a point where it's coming up to this previous support and resistance mark. Yeah, that's probably where it is. So we'll see. I mean, it might end up breaking out a little bit. But there's a couple zones right here. Frankly, like kind of right where it's at. I would usually use the drop ledge. So I would use the last support, which is right here, and that drop, and then I would use the ledge that it dropped off of, which is frankly, again, right where it's at. I mean, yeah. So, and it's very overbought. It looks like it's trying to wind up for maybe like another pump. I'm curious to see what happens if it does do another extension. Like it's kind of winding up like it might try one more. But I wouldn't suggest this goes way beyond 480. And actually, I'm going to use this 450 instead, because I think that's a better zone. I think there's going to be a bit of a tough barrier here. I think it's really at the wall. I mean, just looking at it, it just clearly is at the wall. So there's probably another one that we could use on the rise, but this is a kind of a large wedge-like structure. Okay. That looks wrong, but there's like a tiny little dot there. Maybe it was like a crumb on my screen. So let me let me double check. But it looks like there's a teeny tiny little dot right there at like 61 cents. Yeah, I think there is. Yeah, I see something there. Kind of odd, right? Because it's real low. It doesn't look like the most prominent bottom. Like this other one here looks maybe a little bit stronger because it has more interaction maybe at these times. But I think that you can't ignore those lows. So yeah, that's it. I really think this is probably about done. I don't know what's going to happen with the earnings, but I would not be surprised if it dumped it. It could continue to run into earnings, you know what I mean? Go up to like 450, but I would not at all be surprised if this hits like 450 at earnings and then just drops like a rock. And it probably drops pretty far because there's not been any real pauses here. So you're talking about maybe like a 50% or more easy. Down to like 240. Why can't it just squeeze forever? I mean, some stocks do that, but this to me looks right. It needs to come back down. And I got to be honest, I think at that point it's probably a bad play. I don't know what else happens with this, if this ends up becoming some technology that gets picked up by somebody and it ends up going to the moon. You know, long term, I'm not looking at this fundamentally. So like I have no idea. There could be something really important that's happening here long term, and I don't know about it, which makes the TA subjective to like what you know, because you have this idea that like, well, the TA doesn't look very good, so it might be going down, but who knows? You know, if this is a technology that matters to certain people and it ends up getting a contract or whatever, could it go from $4 to like, $30? And yeah, sure. I mean, like the technical levels at that point are really just previous highs. You're talking about like this area right here at like 890, this area right here at like 17. Those are pretty easy to see breakdowns. But again, like it's not even at this this, if you called it a wedge, it's not even at the top yet. So if you ask me, like, what do I think this is, I would suggest to you it looks like that kind of cat ear breakdown with the hook. Usually that's what happens, is the second, there's a paw, right? So you have the buying climax, then you have a paw, then you have the second cat ear, which is usually very flat. This looks pretty cookie cutter to me. And then sometimes there's like a big hook where it hadn't tested a level. Usually it comes back to that rising trend. So in this case, there's like two possibilities for that rising trend. There's this lower one right here, and then there's this higher one. And that to me looks like, again, that's the retracement level. It's probably like a 618 or a 0.5 retracement. Back down to check that. So I don't think it's going to go anywhere unless it comes back. Even if it were bullish, it would make more sense to me that this would come back down and make sure this is the last distribution level. It's heavy. And it didn't test it on the way out. It just ran up. So I think it's a pretty likely scenario this is going to come back to 230. No matter what, anything fundamental that there is, it doesn't really make a difference. A retracement's a retracement. Sure, they could, but you don't know that. You know, if their earnings says something about that, sure, keep going. But I got to just tell you, like, from a charting perspective, this is pretty straightforward. Like, this looks exactly like what I would expect from any chart with a wedge like this. Is like you have, again, the paw and then the cat ear. And the cat ear literally looks like a carbon copy of the rest of it. And it does always breaks down on that ledge. This is like one to one, almost perfect with what you would expect on a cat ear. It's always the same. So sometimes the buying climax is a little confusing because it can look like that first paw and whatever. But you always have this iterative motion involved. And so if there's like a secondary motion there, you'd expect a secondary motion here, and there is. So in this case, you've got the buying climax, then you've got a paw and cat ear. So the way I used to draw it, just for kicks and giggles, if you guys don't remember this, the way I used to draw it a long time ago was I would do when I first introduced the idea of like this visual, I would actually do a paw, and then I would do like a cat ear with something like this. And the idea was that this is like a cat paw with a distribution. It's essentially like a UTAD. So the way I used to do it, if you don't know what the heck I'm talking about when I say cat ears, it was based on that bongo cat. It wasn't even like a meme. I don't know what it was. I guess you can call it a meme. I just thought that was so funny. And it's almost funnier because I like didn't know it was a thing until like way later in my life. I had no idea that was a thing. And so I thought it was really funny when I saw it, but I saw it like way later, like an old person, way after it was already had already run its course. But it reminded me of the bongo cat, and I was like, man, this is a really easy way to kind of look at distribution because you can kind of visualize it with those markers on it, and then there you go, you have a bongo cat. So that's the way I actually drew it, and this was the buying climax. This was like a secondary motion after an auto reaction down. So the auto reaction down is where you might get like an SOW, and then this is where you would have the buyback in. This is what gives it the appearance of a triangle. So the cat ear isn't complete usually without that triangle, and it's almost always there. And it's essentially just a way of describing like a top. You see it right there. So you usually have like a sign of weakness because this will come below maybe the preliminary supply here where it's like trying to stop it. It just drops further. You often have a sign of weakness here on the trend. So it'll like break the ice level. And then you'll have like a final distribution. And sometimes at the end, you'll get this like big up thrust to go back and check the first year or something. Usually it'll come up pretty far if it does that. Not always. Doesn't always do that. It's not an always thing. But it is there. This is the same exact thing we're talking about on AMC, by the way. So this pattern usually looks very U-shaped. So it can be in like a falling motion. You could imagine taking this same idea and applying it to an S-curve, and you can see like why that would look pretty much the same as an S-curve. This is why Stockfather thought it was kind of like a genius thing, is the way he described it. And he said I should write a book about it because it's a really simple way of understanding a distributive pattern that actually is quite malleable. It moves quite a bit. Like you can change the way it looks and it still applies the same way. And the ideas are the same. That's the amazing thing, is like the concept here of like what this is rejecting against. I don't think it's a genius thing. I think it's a very simple-minded thing because it was an easier way for me to understand things. But I do think it's a way to understand stuff that helps. This is usually the way that I would see it working out. So these are waves schematics, 1, 2, 3, right? Where it's going up and then breaking through some kind of a trajectory support. This is why sometimes you'll get this extension on the last ear as well, because sometimes it will not come high enough on the first push. And then there's like another push, and it's really just a UT in this structure because, again, it's all nested inside of itself. So you'll see the same exact, roughly the same exact formations in this structure as well. This is what we're essentially hoping for on AMC, by the way. So if you guys are like, why are you talking about AMC? Well, this is basically the same thing that you would be looking for on AMC. This is the UT kind of repeated structure of like boom, 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 and then it drops, right? It's the fulfillment of like all these like little micro iterations that are going in here. Oh, suddenly that makes sense, maybe, hopefully. And it usually does. It usually makes sense because usually this is checking the first, then this is checking like the second, and then this is checking like the last. And that's usually the way it goes. I mean, it's that simple. It might seem like it's some kind of elaborate thing, but it's not. This is a very simple schematic. So this is what I'm counting on for AMC. That it actually does go down, but before it does that, it generates these, it finishes by essentially generating these upthrusts. If you don't get that, you don't get that. I mean, it does happen where it just drops. There's nothing there. And then almost always, without fail, there's a backup. And that backup typically comes back down or back to the, that backup is like an inverted backup, right? Because if you think about a backup, most people think it's backing up downward, but it's a backup for supply. They're going back to check usually these levels right here. Sometimes if you're like really, if it's really obvious, there's a trend right here that's checked. And that ends up being like the place that it stops. And that can sometimes, in some people's schematics, that will double as that triangle. They'll use this as the triangle. And they'll see it as like, and it's interesting because Bulkowski talks about that as a way of understanding the breakdown as well. They'll talk about this as like a backup to that wedge. This is the only time where things can, in this particular schematic, where things can go a little bit awry. This is like the only time that really happens. So how do I know if it's going to go up? You say that sometimes it does and sometimes it doesn't. Well, here's what it is usually. Okay, the split between the cat ears, the ear 1, ear 2, there's a marker there on that wave that indicates direction. So like in this case, you don't see all the little nitty gritty, you just see one. But if you did see all the nitty gritty, you might see this, right? That there's actually a strong interaction right here with what's going on here, like directionally, what's going on. There may be like an S-curve or a breakdown right there. Again, represents, interestingly, like the same iteration. It's just doing it now in a different structure. Why is it there? Why do you see that? It's like a footprint in the sand, right? And so you see that kind of build itself out. And then usually what we see is that there's actually an acceleration and or a pretty obvious like connection with the previous. So if this were the case on this one, and I didn't draw it that way, it just didn't, you would have like a rejection here. So there'd be a wave rejection here that gives you a triangulation, and there'd be a stronger triangulation here, a strong triangulation, but it'd be steeper usually. Sometimes it'll even be like directly to that, not always, but that would be where it is. And then you'd have another one right here, and each one is like steeper and steeper and steeper. That's where you find, and by the way, again, this might seem a little bit like bonkers, like why in the world would you do like, why'd you chart like this? I don't think it's hard. Like, I just don't see it that way. I see it as like, that's just the way I see it. So for me, it's like just a matter of like molding your brain, I guess, to see it that way. I just see it as waves, and waves that are basically baking into themselves, smaller waves. So I see this as like a really simple like wave schematic. That's why I talk about cat ears like all the time on here. And then the same thing would apply right here, right? So this is like the resistance comes down, builds a support, and then it hooks. And this is like a generated trajectory as a result, because the market's trying to like buy towards that end. So bulls are like trying to get there, trying to get back up to this level. It really only doesn't work when this has already been checked. But almost without fail, not always, but almost without fail, if there wasn't a sufficient liquidity check on that, and it's hard to tell, again, sometimes, almost without fail, this ends up trying to go back for that UT later, and that's just an upthrust after distribution. You can see this play out, by the way, if you're curious about like, where do we see stuff like this? Well, this is an example right here of one that has the hooks, but it never goes back way high. So like if we're using examples, and I'll talk about this in a minute. If we're using examples on like AMC, sometimes they have the hooks. Like this is an example one that had the hook. It didn't go that high, still went higher than expected maybe. But then there's an example back here of like a really clear and evident cat ear that comes way up to the top again and back checks. And there's a ton of those on AMC as well. So it's not just like a one-off thing. So anyways, so this schematic right here, if it builds out and it looks like it's accelerating, there's a chance that there's a massive pump at the end and it comes back and checks. Obviously, one of the biggest and easiest examples to see something like that on AMC, if you're thinking about it critically, is right here. This was a shrinking iteration of the exact same thing. It's identical. You know, you actually have almost the exact same pattern we just talked about. This would be like your paw right here. Yes, the paw has a cat ear kind of structure in itself. Some of you guys are like, look, it's right there. Yes, you're right. But then it's bigger, right? Bigger picture wise, there's another one. And this is probably not the best right here example of an ear, but you would say that that's the cat ear. And then interestingly, this is very, very flat, of course, so we know that that's like likely what it is. But again, interestingly enough, as it would make sense, this is actually built of the same structure. This is where things get a little complicated because it doubles on itself. So this is built as the same structure. So this ends up being virtually the exact same thing. And if you want to say like, well, that doesn't make any sense, just take it and like shrink it down and you'll see what I'm talking about. Like if you take this particular model right here and just shrink it into a smaller size and then just look at the formations, you actually see that they're doing the same exact thing. Like they're doing the same exact checks. They're just doing it on a smaller scale. It literally is a shrinking iteration. This, especially going into this period, I remember using this and getting a whole lot of crap for it. You know, I'm glad I don't go to that Discord anymore because it was garbage. And frankly, like people would not listen when I said I did not think it was going to run. I said it was going to repeat August. So it's going to pump up, but it's not going to go. This is essentially just an iterative motion of the exact same thing. Right? That makes sense. Why? Because cat ears do that. Like it's part of the distribution schematic. And ultimately, like this is, again, the wave breakdowns are the same exact thing over and over again. And these lines are even, I think they were even like identical. Like they were basically like exactly the same. And people still wouldn't listen. you know, at that time. I mean, some people probably did, but like a lot of people were like, no, it's going to run. You know, I don't remember this one guy was like really angry about it all the time. I don't know. And he just didn't understand what I was saying. And I'm like, it's not bullish. This is not bullish. And it was doing the same thing that this had done, where it was generating like weaknesses while it's going. And then it does it again, right? So it like keeps doing the same thing over and over again. This is the one where it kind of varies because it gets like so ridiculously messed up in terms of trajectory that it stops kind of making sense, essentially. There's like really tiny backups here that actually are more accurately described like a shrinking. The point being is that every one of these becomes like a cat ear of itself, right? And we could go to this point and suggest that it's the same thing. Right here, it's building up iterations on itself, and then it does the same thing right here. And there's so much more to say about it, but I'm not gonna bore you to death. Basically, this one is actually kind of where the final one is, but there's a complication here, and I would have to explain that. It's like a change of character, basically. This is where that cat ear is. So every one of these walks down, and then it ends up going up, and it may not look like it right here, but all of this builds out to a big, gigantic push-up that actually comes all the way back up to this level. The reason you don't see that, and it comes back up to like that first paw right there, the reason you don't see that very easily, which is, again, the same as like this level from the first paw on the bottom, is because this is extended hours move. So when I look at this, like, I could see the similarity and the resemblance like right away. And so I'm not normally like, oh, cat ears rule everything, you know? They don't always, but this is clearly and evidently like the same exact pattern, like this big picture and then this small picture and then even this guy right here. So iterations upon iterations upon iterations. Iterations is the right word to use because iterations denote that they're nested within themselves. So the smaller iterations are a part of the bigger iteration. They are not exclusive from it. They are not side by side with it. It may look like that at times, but they're not. It's a pattern that's repeating like as an algorithm would, like mathematically, until it exhausts itself and finishes. So this is a chain of character. So the question is like, where does it go? Well, in this case, we don't really have the best examples. All we could say is like, because it's not like downward like AMC's, you don't have those level comparisons to make. But you would suggest that this is a very likely place because usually the biggest is going to rule. So the most likely place is like, where did this break down, right? This cat ear break down. And there's really only one major spot I can see that we haven't already picked out, and that's this guy. So we've already picked out this one, which is where this hooks down. It's like where the final one is. We could pick out this one and say, well, that's probably where it goes if it's going to go high, right? And then we could say like, well, when does it get there, right? Like, and how long does it take, so on and so forth. And we'd have to find it. We'd have to look in the nitty gritty here and see if we can identify as best we can maybe where that goes to. And I wouldn't even use that bottom. I'd actually use this bottom right here. I think it's stronger. This one. I think that's better. This would be like the penultimate, I would suggest that this could go if it continues. That doesn't mean it couldn't have a backup first. So it's important to note that like this could easily still stop short of that on the first move. Maybe it doesn't have as deep of a retrace and it has like a more minor pullback and it goes like one more time. But you would suggest that that's probably as high as it's going to go. And when we look back, we could say, well, what hasn't been tested in a while? There's not much. You know, I would suggest to you that maybe this 890 if it went in like the far future, but it looks to me like pretty much everything was back tested. Perhaps like right in the middle here, around $6. But that's it. I mean, if it's going to hook, it's not going to do that because it would come down and it would just fail to advance, you know. and it would just kind of crap out. And this is like an ABC correction, and then it's done. It starts a new wave down, and it's going to probably just go back to lows. It's going to at least come back down here and check this level. If it did go up, it could be a reversal motion, but that's complicated, man. That's where things get really dicey. You really are better off just looking at levels and like basic indicators instead of looking at a cat thing that's goofy. Because once you get to this point, it's like, especially if it went down first, that could be an indication that there's a spring involved. But once you get here, it's like, even if this went way up, like we were suggesting, that doesn't mean anything. Like, it doesn't mean it's necessarily going to break out. It has to like hold a support after the fact. So there's what I call the ice cross, which is this lower level right here. And this is the one that gets us a lot on AMC. It's like we might get the extra extension. We'll go beyond the bottom trend. We'll go beyond this one even. But we get into this ice level, and if we pop above it, everybody's like, it's going to run. And I'm like, I don't know. Because the main problem here is that in order for this to work, it has to hold that ice level and then just kind of continue to reverse upward. But it very rarely does that. Like that's essentially like a double flush. It's like a flush down, and sometimes even triple, like up, down, and then up again. And then at best, you're usually like looking at that like a 50-50 schematic, and it still has to get above whatever top is over here. So there's a lot of problems. We've had ridiculous extensions on AMC before. One example is like this build out right here was a ridiculous extension. So it looks like this crazy change of character, like UTAD thing right here. But it's really just this hyperbolic hook, you know, even like potentially like its own ear, but it's like it's at the beginning of a new cat ear, you know, which is the case, I think, here. So I'm not a big fan of this chart right this second because it's hard for me to identify direction. I like buying here. This is what I was arguing yesterday about AMC, because people were saying, well, AMC is boring and flat. It doesn't move. Look, Finger's moving. That was what the guy said. Well, Finger didn't move for December all the way through April. So I'm not really sure what that was about. Because he was trying to say that like AMC doesn't move. And I was like, that doesn't make sense. You should be thinking about stocks when they're doing consolidation and which direction they're going to go, because that's where you get the big moves. Like this is already close to done. And even if it goes again, like there could be a backup here. So I'm like, how do you know when to trade this? Like, it's super strange. This is a really tight angle. As soon as this breaks down, it's going to dump, you know, hard. This would have been a better time to trade it. Back here. I couldn't have guaranteed that I would say it's a buy, but it would have been a better time to trade it when it was boring. If you had accumulated from $1 to $1.27 lows, you'd be sitting pretty happy right now. Point in case. Finger kind of proved that point, which is interesting. I haven't looked at Wolf. Do you watch anything beside AMC and GME? Are you watch what we were looking at? Finger, FNGR. We were looking at SPY. What in the world? Yes, I watch a lot of things. Look at my tickers. I've got FANG on the docket. I've also got, in addition to that, NU, MPW, Wolfspeed. I've got AMD on this one. We've looked at Tesla. I've got Starbucks. I'm still in Starbucks. 95 calls, folks. I bought them back here. They're making bank. Yeah, AMD, Tesla. Like, this is FNGR. If you're asking like nicely, like, hey, would you look at something else? Then yes, absolutely. If you have something you want me to look at, I will try. I will not always get to them, but I will try. We looked at Logic Mark. I've got IWM over here on the left. I've got SPY over here on the right. We did a SPY analysis first thing today. If you're asking in a way that's kind of like condescending, then that's more my sass is coming from. but I can't hear your tone of voice. So if you're being sassy about it, I'm going to be sassy back at you. Yes, I looked at a lot of things. If you're being really genuine and just kind of asking, like curiously, like, hey, do you look at other stuff? Can I ask questions about other things? Then I'm going to be very nice to you and say, yeah. I'll be nice to you either way, but I'll try. But I'll be a little more sassy. Sassy is not the right word. I'll be a little bit more gruff if you, there you go, gruff. I'll be gruff. Sassy is like feminine. Gruff's like manly tough. So dumb. Sorry. But yeah, anywho. AR. Yeah, you were asking really nicely. All right. I went off on you because yesterday we had a couple people that were like, the market's bigger than AMC, man. And I was like, yeah, I know, dude. I don't know why I made them sound like they're stoners. The market, man, it's like huge. There's so many tickers out there, dude. You got to broaden your horizons. It's not just about movie stocks and game stocks. What about them nature stocks, man? Are there any tree-hugging stocks out there? Probably. There's probably a few. I think there's a lot of like, I mean, I don't know what they have, but I'm sure there's like environmental stocks. I don't know. They're getting wrecked for the most part. I have one ChargePoint that I've been on for a while. I just bought more because I'm crazy. I just don't know what's really wrong with their company. I mean, like, they're not the most profitable company in the world, but I don't think they deserve to be shorted to death. They're still like doing okay. They're doing what they need to do, and it's still a huge booming industry, like charging stations, infrastructure for EVs. Somebody told me like earlier this year, I don't know what they said, but they said it was like 1% of sales or something like that. That is like not true. I looked at EV stats. They're really high. In China, it's like 50% of the cars being sold are EVs. And I mean, China's pretty big, guys. There's a lot of people in China. It's really high. Like the numbers are extremely high outside of the USA. And even in the USA, they grew 10% year over year. Like, that's a pretty decent margin. That means it's growing. It's not, like, exploding yet, but it's growing. I think Ford is, like, the number 2 American EV person, too. It's just kind of crazy. So anyways, I see it as a booming industry. I don't know why it's getting thrown into the gutter. Mostly because, I guess, the current administration like undid a lot of things, so they got screwed. It's weird though, because like there's no analyst targets for it that are like it should be bankrupt. They're all like it should be like $3 or $4, but it's sitting at like 60 cents. I think it's going to explode one day. It's going to be one of those stocks that just randomly out of nowhere goes back up to like $2, and everybody's gonna be like, what? I do want to talk about AMC though today, because I had this really odd question in my brain about what the heck is happening. Nothing that's transpired here really makes me feel very comfortable, because it's this weird like low volume. It looks like a low volume chop to the upside, and I think to some degree that's true. To some degree, there's a problem here of advancement. It's like not advancing very fast. It's got this bizarre kind of chop to it. It looks a little bit distributive on the small scale. It has a lot of similarities to what we saw back on March. So there's certainly some negative things to say about it. I said yesterday that it's a bit of a mixed bag, because you do have this sense of like, well, it could drop right now. But then if you look at the actual targets and where they are, based on the fact that it didn't make a sign of weakness, it doesn't signal a drop that would go significantly below recent lows. It would not be significantly below, for the most part, like 246, for example. Like there's not a lot of evidence that would happen. So there's a strange kind of dichotomy to it, where on the one side you're going to say it doesn't look particularly bullish right this second. But on the other side, it's like the bear case in this example is not really the best, at least for now. And it does seem to be missing an upthrust. So I've already done the 4-hour comparison like 300 or 400 or 500 times at this point. And I did that 4-hour comparison because I like the 4-hour unbalanced volume charts. I think they're easier to read to some degree. The daily chart might be a bit more accurate. So just to be fair, like daily unbalanced volume tends to be more consistent on the whole. So there's a reason that you might look at one over the other, but the 4-hour has been climbing like rapidly. So when I looked at the 4-hour, and I'll switch this right side to 4-hour for just a second, this is bothersome as all get out to me. I'm going to double click so you can see it. It's running up really far, way beyond where it was like over here at 295. The thing about unbalanced volume that's important to note is it's a cumulative thing. So what that means is that, well, in theory, what that means is that the level should not matter as much as the direction. There's a lot of indicators like that, and on balance is like that. So the actual level here should not matter as much as the direction that's being moved. But when you look at OBV divergences, there's very explicit divergences that are marked. And one of them is pushing on a resistance while on balance volume is just taking off. And that usually indicates that the direction, if it's going with it, right? If it's not divergent, it's convergent, it's moving together. If it's moving against that resistance while the on-balance volume is pushing, that's usually a good sign. I would say that normally, but then I looked at the, I went to look at the daily, and I was like, the daily is not really giving me a lot there. It's definitely going up, but it doesn't look like the 4-hour. The 4-hour looks like it broke out, and it's already running up hard. But the price is just sitting here. It's like flatlined. And if you saw the reverse happen, that would also be good. So if the price dumped and the price went down and it was pushing through lows, but this stayed ridiculously resilient and stayed high, that could also be very bullish. That's actually kind of what we see on the big picture, albeit there's some caveats to that. And we'll have to discuss those when we get back to the daily chart. But the idea here of this kind of just going up by itself doesn't necessarily mean that smart money is loading up. I think that you can look at that a couple different ways, but it would represent a change over time, and that's a fair assessment. You could say that, yeah, since the bottom that occurred back here on April 30th, for the last 12 to 13 days or whatever, there has been a rise in on-balance volume, which indicates that there is some kind of an accumulation going on. It doesn't mean that the bulls are going to win. It just means that there is an accumulation going on. There's a similar dynamic that happened back here on this particular drop zone. Why am I looking at this like this? Why are you looking at this area where it just drops off a cliff right after? Well, it's important to note just these two things, and then I'm going to move on with the analysis. One, the reason that I'm looking at this is because I think this is an iterative motion. So I see this largely as the same that this is. Like, it's essentially the same motion. Okay? So just like we were talking about before, you're like, hey, I didn't think you were going to tie in all that cat ear stuff to what we were talking about. I am going to tie it in. That's why I was starting to go ahead and talk about it. People don't want to listen because they think it's about some other stock. That's their own problem. But if you were listening, you know exactly what I'm talking about, because this is like an iterative motion here. And on the bigger picture, I would expect this to do the same thing. I've been arguing for quite a while, for a year plus, maybe more, that this is iterative of the larger structure, which means, again, it's kind of combining the same elements, doing the same pattern. It's the same behavior from smart money. It's no different than what's normally been going on, which makes it kind of easy to track. It's not perfect. I don't think about things as much in terms of bars patterns as I do about what levels are being tested. Like what's going on right here when this pumped up to like $8 or $9 in extended hours is that it was back testing certain things and a kind of a finality before moving on. And also probably has to do with the an element, I want to say of arbitrage, but of trading pattern with your operator. Your operator has specific ways they're probably entering and exiting trades, whether those are bullish or bearish positions or both, which is usually the case. So it's not about either or, it's usually about both. And so there's a sense in which, yes, there's a reason that you might do that in order to sell and start a sell-off, for example, in this particular case, because it would be reversing down. So that being said, I don't know how to reconcile the idea that on-balance volume numbers don't necessarily have to be the same, but I will say, like, they don't have to necessarily matter that much. It's more about direction. And I've been talking about numbers a little bit more than just direction, but I will say that on the whole, on balance still seems to obey certain rules about numbers. And I think, again, it's pattern analysis. We're probably not fully aware, and I'm not fully aware is what I'm saying, of like what exactly is going on. But there's some kind of an element of that where it's hitting certain levels. Like, why would, if the number doesn't matter, why would this reject at the same level every time, right? If it's just about direction, like, why would this not matter? I think it does matter. And if it were just about direction and the numbers didn't matter, well, yeah, like, direction's important, but ultimately numbers define direction. So like a high or low is going to define the direction, therefore the number matters. So I mean, directional input perhaps as a trading pattern, as a trading tool, might be a little different than just using it as like a support or resistance. But I think both would have to apply to some degree. So anyways, I digress. So number one, I'm using this to illustrate that this is probably a cat ear setup and that it's missing an element. It was missing it back here. It didn't go back up high enough, in my opinion. It didn't go back up high enough, and I think there's reason to think that it's starting to do that, and it's going to try to do that before it goes down low. And that actually relates back to what we saw here in 2020 to 2021, where it did something very similar. It had a really, really large retracement backwards before it went down to a spring. And it has to do with Wyckofian theory that you probably have a big push up before a spring. You don't always have that, but you almost always do, okay? It's like a most of the time, this is what happens kind of thing. So I had been arguing for a little while that I think we're going to come back up to fours, maybe even like 460. Okay, we'll see 460 pop up today a little bit. And then 485 came up a couple times. That was another level, but mostly 4 to 460. There were some earlier hits at like 370 and some at like 330 even, which could present a problem, you know, depending on what happens. We might get in a situation, unfortunately, where we see a lot of this move happen in extended hours. You know, it could push all the way up to 460 and then drop down beneath 370, and that's just all we get, you know, and you get what you get. I mean, there's no real way to know for sure until it happens. So there's going to be some dynamics that I can't predict. It's not possible. But I will say that on the whole, do these schematics roughly run the same? And the answer is, yeah, they definitely do. And I was right to consider them iterative, and I'm not going to go too crazy into detail about why that is, but I did go ahead and drop the schematic on top here so you could see the comparison if you want to do the whole thing where it's like bars pattern or whatever. The idea being that, of course, this is the breakdown that goes back to the original breakout level, which on the whole is like a 50-50 from the bottom. And so if you use the bigger move, it doesn't make any sense, right? But if you actually use the second and the third move, it makes perfect sense because this is like the middle zone right here around $3 to $4. That's really important because saying that it goes back to $3 to $4, you're also saying it goes back to the middle, basically. The 376 especially, and then the $4 up to about 450, that's like the 618 to 786 region on a backup. So if you have this range defined as this area, then it almost makes too much sense to go back to at least 370. Yes, you can see that moving average coming down, but there's actually other retracements. There's like 618 retracements that go a little bit higher, like farther extensions. That's fine. That's totally normal. If we flip the chart and you saw that as like a run up with a backup, nobody would question this, right? If you thought this was like a wave one 2, and then this is a wave 3, and the wave 3 breaks down, you would say, well, what's the retracement possibility? Well, wave 3s don't have to have huge retracements. They don't. But you would easily look back and say, oh, come back and test one of these trends from earlier. Guess where they are? They're in like the 4s and 450s. Before advancing, if it needs to pull back, it would do that. Like if we flip the chart, this almost looks too obvious. It's like, yeah, it probably could drop here and come pretty far. At the worst case scenario that most people would say, if I were looking at this upside down, in upside down land, is that this is not going to go lower than maybe this trend right here, right? Which again, probably looks a little more like a wedge anyways. So like kind of worst case scenario is like, well, it only goes to 330. Hey, that's that number that you talked about. Why is that so problematic? It just is. There's a lot there that could go wrong, right? So absolutely, like, could it end up having some trouble? Yeah, it could. But I think most of us would agree, just staring at this chart, that although that could present a problem, what seems very likely is that we go back and retest this region right here. So again, I'm flipping the chart upside down to just kind of illustrate the point of like, why would this back up there, you know, in terms of a backup? Well, it seems pretty straightforward to me. Like there would be a reason to come back down here. You could check this trend, which is not much of a trend, but it's there. And it is a SOW because this pushes higher and then goes backwards. You guys are like, well, actually it was going lower, Booksy. I know. So in some ways that's an SOS because this was pushing higher. Right? But if it were upside down land, you would suggest, man, we could go back there and check that bottom. But since it was pushing lower, maybe it does go below it. Where has it not tested? Well, we didn't check 392. That's for sure. Like, or this level right here, I should say, like 390. There's no back test on it. There's a gap zone right here. And it really goes from 370 up to 4. So the logic is there that you would have that if this drops. It's already losing those trends. The only question that we're really asking at this point, just to be clear about like why I've been talking about the possibility of a final push-up, is really more of a question of like wave formation. Does it need to have that last wave? A final push-up here may look really bad, but it doesn't necessarily represent an evil. Is if we were talking about this cat ear stuff in reverse, we'd be looking at this saying, well, that could just be like the final upthrust. We see that all the time on AMC, that it makes this kind of build out and then does like a final upthrust, and then it slides really hard the other way. Well, we like to talk about that in terms of distribution, but in terms of accumulation, it's the same thing. Now, this literally just happened, you know, multiple times. But I mean, there's the obvious example, which we just showed, which is this one. This is an example of a distribution where it goes up before it goes down. Well, the same thing applies sometimes to a accumulation, right? Like right here, this goes down and it pushes to a new low before going up. It's an inverted spring. That's what a UT is. So the idea of the only question we've really had in our brains about this that's been kind of like worrisome, I suppose, on my part, is the idea that this could still make a new low. It's not impossible, and it might need to. We don't know. You know, we don't have any kind of crystal ball to say it definitely has to. If you're an Elliott wave person, you might look at this and say, I think it definitely will. I'm not really in that position. I'm kind of like in the middle. I think there's a possibility, and we talked about it yesterday, there's a decent possibility this needs to pull back because there's a RSI bit that we looked at, and it looked like it's missing a backup to like the 50 on RSI on the 4 hour. But I will say this, there's nothing really highly inconsistent about what's going on right now on the price action by comparison to on balance volume, except that on 4 hour, it looks like it's rocketing already, right? Which makes me wonder what the heck's going on here. There is a model where that happens, and that's called, I call it a rising accumulation. And we'll get into maybe some of the details about that in a little while. I don't want to go into that right this second. Just keep going on this. So there's a possibility that this needs to make a new low. There's a possibility that it just goes back. So that'd be like this, right? This dude right here. Ooh, that was bad. So there's a possibility it drops down to like a slightly new low, right? It would be like a really quick rug pull to like 246 or something like that. That's what I was saying, or 245, something like that. It really wouldn't have to be very far. So you can easily see why. Because if this were to lose, that trend here, you can see why it would pop all the way to the top. There's a pretty simple like diagram right there of like, that's the difference. It would go back up there, potentially test, and then that's it. It's going to take off and go to the moon, right? Well, sort of, right? We know at that point that if it did something like that, does it have to, Booksy? Well, here, I'm going to get to that in a second. But if it did something like that, you would expect it to, again, finish by going this way now. So you go down so you can go up so you can go down again. That's really confusing, isn't it? Only if you don't understand like iterative layers. If you don't understand the layering and patterning of a chart, that may not make sense to you. You might think that that's kind of bonkers, clowning around, goofy way to look at the market, but it's not. It's about liquidity grabs. It's about finishing the current pattern, so on and so forth. It may even push as far as to test the all-time low, but I'm not going to go there yet. That's just a possibility, right? So you can see why that would make sense. When I look at this on the big picture, I'm like, yeah, that makes perfect sense to me. It comes back up, probably hits 4, maybe hits 460, maybe hits 485, but I'm not going to hold my breath. It's going to hit this region. Might even happen in extended hours. And it's really doing that to generate more sellers in this case. That's my assumption. Why? Because so far, this has been the MO. This has been the way that this has operated. So again, looking back at this as a iterative motion, you may think that these aren't like one-to-one. They do look similar in some regards. I purposely don't do this on this channel almost ever with the bars patterns because I think it's a bit like it makes you think that it has more to do with the ups and downs, like that this is some kind of a sequence that has to be followed in a certain way. Yes, this is very similar to what we see here. I agree. Yes, there's a lot of similarities in terms of how some of these things move. But no, it's not always going to be like a perfect fit, and it will work until it doesn't usually because there's a pattern that's playing out that's more important, and that has to do with what was being accomplished right here, which we already talked about, right, in this breakdown and this retest, and like ultimately it's this trend right here that's being lost and then rechecked, and ultimately it's a distribution, so it's going to just dump from there. That's very, very similar, if not exactly the same as what we saw here. So when I talk about these breakdowns and these ideas of like moving through these directions, the directional input that you should see is not something about, it's like, and then there's the cross, right? And then here's the cross, right? So it's not really about the kind of being like perfect, you know, with everything or getting it like just right. Like it has to be like one-to-one with this or that or the other. It doesn't really have to be. I think the general sense here is that there's a similarity in the motion, and you really should be looking at what was then accomplished when this went back up. And that's what I was trying to do today with the daily chart instead of a 4-hour and looking at the on balance. I was like, well, I might as well look at the on balance. I'm here, right? I'm going to look at this daily chart instead of looking at just the 4-hour and check it out and see where it's at in the grand scheme of things. And it does look pretty much one-to-one. So my assertion that this is essentially an iterative motion, I think it's correct. I think it's pretty straightforward. And I also think that you can do a decent enough job of understanding why it would go back up. So again, we just looked at it upside down land. It seemed to make sense that in the upside down world, yeah, that could definitely be a target. It almost looks too obvious, right? There's other things going on here, though, on the big picture that are kind of interesting, especially with on-balance volume. So one is that if you look at that level, this is like an LSPY right here. It's just super ugly, right? This August move, it does dip too low, and then subsequently, or maybe even interestingly, the length of the dip here actually goes above, so it dips below about equal amounts that it goes above. So it's like this double flush motion, testing low, testing high. It does that based on where the original LSPY is. So it's a very similar motion to this original LSPY, which is that hook breakdown from the original all-time highs. So this top 115 area really, I didn't put it in the perfect spot, but it would represent like where that support is roughly, okay? So 114 to 115, that's roughly where that support was built out originally for AMC. And you can see on the macro, that's where that finally was tested and broke down. Now it does the same thing here, right? In that we talked about this as an iteration, smaller iteration on the cat ear. It actually walks down through that level. And this is what cat ears do, right? Is they go through it and then they come back up and they check it again. This is exactly what we were talking about here on this chart finger, because we were saying like, well, the idea is you're walking down through a level and then back testing it. That gives you the hook appearance. Those matter because those levels indicate potential places in the future that you might come back on a wave. It's like a wave breakdown, right? Every time it drops through and creates another wave, if it's distributive, it'll definitely look kind of like a kitty cat ear. If it's an accumulative, you're going to kind of miss it if you're not understanding what happens here when it's bullish. Because when it's bullish, it doesn't do this, right? When it's bullish, these lesser iterations will actually break up and over and go into like an SOS. And you'll think that it's a completely different schematic, but it's really not. It's just that the cross went over, right, instead of down. And that happens, right? It happened on AMC once, right here, where the cat ear went up and over and then it broke out. It's just a simple way of looking at it. Like, is it breaking out? Is it breaking down? You don't have to necessarily understand cat ears to get that happens, but you also, it's a good way to identify where those key points are. Okay. So what I did here for this comparison with this bars pattern is I actually took where this, I just scaled it just to see curiosity, right? Is it roughly to scale? So what I did is I looked at where this first up thrust was right here. And then I looked at where the breakdown was, where that slide happened. You guys are like, this is interesting. There's a visual to go with this nonsense. That slide happens right here in December. Proportionally, it's pretty dang close. There's some delay action that happens, but it's pretty dang close. In terms of where it goes, in terms of these targets and like looking at the relationship between them, I didn't do it like one-to-one across these charts, but you can do the same relationships by like looking at, for example, like this peak and this peak, which would represent, you know, the two different iterations tops. And you can see what happened back here is they actually broke out right there. So those two iteration tops break out at that bottom. We're seeing the exact same thing happen right now. This is the two iteration tops. You know, at best, or I guess at worst, you could say it's this one, but both of those broke out. So like this guy is pretty much primed and ready to go. And we've been talking about this from a very different point of view. We had not used a single bars pattern on this at all. All we did was use Booksy's weird measurement methods, because I know how to dissect it. What I'm looking for is specifically these kind of targets that have, in my opinion, like a high likelihood of hitting based on wave formation. So like one would have been looking back here at this and saying, well, there's a wave formation that kind of goes up this way. Now, did that hit? No, it never went that high. But it does go, you know, it does go pretty high. It ends up going way back up to the top. There's others here that you could look at as you go forward that do kind of break out, you know, in different ways. Those are the things I'm looking for in terms of direction. Where does this look like it ends when you line up those two things, those bars patterns, right? I mean, it could be a day or two off. It is what it is, but it looks like it ends right here. Well, that's odd. It looks like the 14th or the 15th, doesn't it? Yeah, it does. There's not really much question about it. And I actually went and just kind of double checked. I was like, well, you know, it could be a little off. Technically, some of these are a little off. They're not like all perfect. This one's really darn close to lined up. It's like a day or two off. This obviously is way off. This took a lot longer to go up, but the bottom here is really close. If you look at where that buy-in was, it's very close to that bottom. The bottom here is really close. Again, maybe a day or so off. This bottom is pretty much right on the money. Again, it could be 1 to 2 days off, but it's pretty darn close. So are we in a shrinking iteration? Yes. Does it mean we're going to definitely have upside? Unfortunately, no. And if you were just looking at a bars pattern and thinking that means we have to go up, you'd probably just say, yep, it's going to go up. It's official. I've given reasons besides a bars pattern, right? And the one big thing to me is that back test, that M cross down. There's no solid check backwards. And I think it's very important because I think it has to do with where the money is moving, right? And if you look at the on balance, it gives a really good case for that, because if you go back to where, again, you see these distributions happening, the bigger sell-offs are happening at the same level every time on the daily. We see the same thing happening right here. So some people have said, well, like, I don't think it needs to go that high in order to sell down. I think it can keep selling. I disagree. I think the price doesn't need to come up to those levels again. I think the on balance volume, though, probably will. I think the on balance volume is very likely going to. And we have a pattern here that's essentially like 1-to-1. Again, I don't want to get into like too much of the nitty gritty, but there's certainly like a pattern here that's consistent, very consistent. And the biggest difference, of course, being the levels. Now, some of you might say, well, yesterday you did a comparison to this region, just this region. Yes, I did. Why can I do that? I just talked about it. It's the same thing. You can do either one. That's the great thing about iterations and iteration methodology in this particular sense, is that you don't get just one pattern that you have to look at. We looked at this pattern yesterday. We broke down this pattern yesterday. This is the same pattern. It's the same pattern. It follows the same rules. It's just flat as opposed to more down. But it's the exact same pattern. So when we looked at it yesterday, we did a comparison to this area versus this area. Now we're doing a comparison to the whole here to this. They're both valid. You could also, if you really wanted to, though I don't really recommend it because this one's a little trickier, but you could do a comparison from here to here and just look at this area only. And that's also an iteration, because remember, this is like nesting cat ears. It's like Russian nesting dolls, right? Do not invoke the power of Putin here. I'm just joking. That was dumb. All right, so like this is, I don't even know why that came to my head. This is like the Russian nesting doll, right? We talked about this a few minutes ago. So you can do any of those comparisons, and it would be valid to me. I'd be like, yep. If you tried to compare this area with some other garbage that didn't make any sense, I'd probably be like, no, I don't see that comparison. That's the biggest problem that I have. If you guys are wondering why I'm so anti-fractal, it's because people do comparisons with areas that kind of look the same, but if in my brain, I'm thinking about like, where is that in the schematic? If it's not like in the grand scheme of things, if it's not in the same place, if it's not the same iteration, I don't agree with it. So there's kind of an element there of like, well, that's cool, but it's kind of lame booksy too. Take a look at what's going on back here when this took off. Before it jumped over the creek, right? Before it jumps over this kind of middle creek here, it actually has a back test to that 67 area. It says 66.73. Don't worry too much about that number. That is, again, the center mark. If you go back and you look at this as a retracement, it's the center mark of this retracement here. So this is like the middle of the wave schematic, right? It also is where this initial support is that's trying to like stop it from going down, but it does go down. That's exactly what we have here. This is an attempt to stop it. You have a bottom, and then you've got a middle support. We were just talking about how like it's a little bit nebulous because the middle support, oddly, doesn't really look like it's in the middle. It kind of looks like it's in nowhere land, right? That 376 is probably anyone's best guess. I think that's the most highly probable number out of all of the numbers that we have. But I think that it's closer to that 4 area because if you look at where the actual selling happened, it happened right here just above 4. Then there's this weird kind of gap zone where like nothing really happens. There's a resistance built, but nothing really happened there. Everything else, all the other ledges are right here at 4. That's far more consistent with what we see previously on this, and I think it's the right, I personally think it's the right call. I think it's the right thing. I think it's the right area. It makes the most sense to me. So if you look at where this jump happened, right before it jumped over like this creek right here, or as it's jumping over this creek right here, it's kind of intersecting that bottom. We already know where that is because we've talked about this like multiple times. Like we're very aware of where that is. It's right here. It's right at like 420. And we've gone through this kind of a number of times, but it's important to note like these numbers are wildly consistent with what we expect. So that's a good thing. This is also the level around 430. Right here is where we hooked way back in the day. So this is very high probability to me. It's like 430 to 420. Another potential zone right here is the second breakout. This is a little confusing. I went back and I looked at, this is why it's confusing, because I went back and I looked at this and I'm like, well, it doesn't look like it goes that far, Booksy. It doesn't even get there. Right, but you all remember it if you were in AMC at the time. That is not true. It actually goes very far. It just didn't do it in regular trading hours, which to everybody's dismay, it never ever goes back up there in regular trading hours. You don't get the benefit of it. But there's so much volume in that move that I think it would be a disservice to ignore it just because it's not in regular trading hours. And in regular trading hours, it absolutely goes up there and it checks both the widening creek coming down and that level. And it actually exceeds them. So it goes quite high. It comes over the previous top even. The previous top from February. I mean, it goes way back up there. So in extended trading hours, this thing is very, very high. It's at like this $70 level, right? That's not the same. It's not the same as where it opened. It opened very low. It opened down here. I mean, I think it went from like $8 to $6, and we didn't see any of that in regular trading hours, which is garbage. But that's just the way that it is. I can't change that, and it stinks, but it's there. So when you look at this, you might be saying, "Well, it didn't go that far. You know, it really looks like it's going to only go to like 3." I don't think so. There was a high volume there. I'm not really sure why they did what they did, and not letting it go during the open, or if it was just kind of like somebody else dumping their shares. Maybe they just needed to get out of something, change direction really rapidly. So they just quickly brought it up and then dumped their shares, loaded up. That seems more likely. But there's no doubt in my mind, like that's the level that was ultimately being checked. So like, I think it's very important because that's a very significant difference. So where is that level? You tell me. I mean, if you look at it, it seems pretty obvious to me. It looks like it's going back up to check that 433 bottom, and maybe, depending on how you interpret this, maybe it's coming up even higher. But I think without too much speculation, that looks like the right level. That's the level that's ultimately being tested. Now, I've found at different times that 461 seems highly likely. I've found different times at 4 to 415. This is kind of the first time I've really looked at this and just said, you know, I think maybe 430, but that does make sense to me, okay? And we've talked about why this might happen more than a couple different ways. This is just one example of that, but that's where the upthrust goes, okay? One other example of that would be kind of like the pattern itself right here, which I think I've used numerous times as well, because I think this is essentially the same pattern, but taken from a different point of view. You would take this and you would apply it to like here, and you would say, what is this pattern when it drops down? What is this ultimately, this gigantic upthrust right here that happened last year? Where is it ultimately going and why? And I think I've already kind of identified the same zones. It's the same exact target area, like where this goes to and why. Well, it goes back over the top of the breakdown here, which would be right here around 4. That's the easy way to describe it. Okay. So I'm looking at this like, all right, it's a range. Seems 376 is likely. There's the hook level. Seems 430 is likely. We've gotten some other targets like 461. We even got a 485 target at one point. What about this like widening that's going on? Where is that check supposed to happen? There's two markers here, and I'm going to favor the lower one, not the higher one. And I'll tell you why, but the main reason is just that when you go back and you look at where these actually start, these don't actually start at the top. They don't actually start at the buying climax. These actually start on the first cat ear, which I believe is right here. And you can see it fairly clearly with on balance volume turned on because the patterns are almost really obvious because they're going sideways. But it's that first initial pump, and then there's like a distribution element, and then it goes into like a hook, right? There's a build out, but it's that first initial pump. Now we've talked about the 1, 2, 3. We did that on the other time frame. That was with RSI. That's not with this. But I'm just looking at this as like, that's the big cat ear. If you're looking at the big picture, that's really where it starts. And that's this guy. It doesn't actually start on the upthrust. It's weird because the buying climax itself almost doesn't matter in both of these schematics. Don't get me wrong, it's as a number it matters for Fibonacci retracements and stuff, but ultimately like this is like the ceiling right there. This is like the one that's defined. They kind of built it out right before it, and then this is really where that big resistance starts and everything branches from there. It's the same thing back here. Even though that does go very high, and it does, this is the chosen ceiling, and it's this previous level that was used. And it's ultimately the level that we never really come back to, right? It kind of starts breaking down. Well, then when you look at it that way, this is like your cat ear distribution, so on and so forth. Now you might say, okay, let's say I buy into that idea. Why not use, if that's the case, why not use this one, which is really, really low? And then again, there's the 330. See, we're screwed. We're not going to go over 330. Well, I'll tell you this much. I do think that is where that is, but I also think that that represents the same thing that this represented here. So like I'm pointing on my chart to that area after that Judge Zern decision. So after the upthrust, it came back down on top of this level and beneath the moving average. You think that's where it is? Yeah, I do. There's another pocket right here. I've already have it on the chart. It's this other marker right here that comes down. It's essentially like a secondary trend. So this dropped and then it forms like a new trend. This is like widening out, right? If it breaks out of this widening, there's another piece of evidence. You have a widening trend right here. If it breaks out of that widening, it should head back to the top, which is like 4 up to 430. There is another one, Bukowski method. But if it's bearish, it comes right back beneath it. And that's very typical, is that you break back underneath and you end up in this little pocket right here, which is 3 to 330, 3 to 325, maybe even a little bit, off at first. It could bounce higher. It doesn't really matter. I think this represents a sort of a correlation between the two ideas, that this is pumping up really far. Doesn't surprise me. Now, worst case scenario, would it be just that hit and then come back down to here? Yeah, I mean, that's worst case scenario, I guess that you could put that on the chart and say that could happen. It stops at like 330 and then it comes back down. Here's the problem I have with that. You do not have that back test. There's no way there's no way on earth. I was about to curse it up. There's no way that's comparable. I cannot find a reasonable comparison to that beyond just saying well, there's resistance there. I know, but there's a lot of resistances elsewhere. Even up here at 360, I would say that's even better as a wave rotation as a resistance than 330. It's just that 330 has a lot going on there. That's the really main reason why I think that it's kind of contentious, perhaps, for me. But I think on the whole, this makes sense, okay? That's used and utilized, But then I looked back and I thought, well, then you really only have two other options. You either use that weird peak that we made, which, by the way, I think this is the beginning of the widening. And I'm going to talk about that in a second. It's like the first indication we really have outside of this low that this might be a widening, because it starts branching outward like a distribution would, right? They're doing these really violent moves here and then starts widening out. That is one indication. That's that weird move that we made. It was kind of before earnings. It was when they did that. There's some news that dropped and it just popped and then it dropped really hard. It was really bizarre. It was a big fat hook. And then, of course, we have the other peak, which was the big hook here, or the big up thrust, I should say, on the December 5th, 6th area. Those are the only two markers I would use. When I look at those, I'm like, well, the one that was the up thrust here, that was random out of nowhere hook kind of thing because of the news, that goes to June 6th, and then there was another hit there on July. All right, we're losing data here. Let me see if I can get it to work. Doesn't want to work. It's like the same thing every day on this thing. You get to like 2 or 3 o'clock and it starts crapping out. I'm not blaming anybody, but part of me wonders if somebody gets in the chat and they have some kind of like malware or something and they don't know it. No, just your internet, Booksy. All right, well, I'm going to keep talking. Maybe you'll hear it, maybe you won't. So this to me seems like the strongest because that up thrust is also met the day before. And so when you look at December 3rd, that push, it hits the same marker. So I think there's 3 there. There's only 2 elsewhere. This one also very strong. Could be a problematic one, but it doesn't make sense to stop there unless you're just not going to break out. Again, like this idea that like you could be in this widening and it's still going to make a drop, but then it would break out later. It's very confusing. And this becomes like this massive quadruple flush. It's not impossible. It's just really weird. It's very weird. And it also doesn't make any sense of this idea that this is like basically a huge breakout move on the whole. And that's where we get back to this motion here where once this broke out, it just ripped. It didn't stop because of other, there's another trend here. It didn't stop because of this, you know. So you go back and you look at this, the same cross that I drew right here, low, ignoring that kind of blue line. Yeah, I don't know. They're doing it right now, but that's the same marker, but it didn't stop there, you know, at least not in extended trading. I was just kind of ripped through it. So my expectation would be that there'd be a, even if you have like another line here, there wouldn't be like a stop. That does mean though that it could come back down really hard. Like we may even see, especially if it dips like lightly here to like 260s, I would not at all be surprised to see almost a full throwback to 260. So if it hits 260, then rips to 430, I would not at all be surprised if it came all the way back to 260 and then has a violent bounce back to the upside and then it drops finally. That makes perfect sense to me in a lot of ways because, again, the nature of this would be distribution to quickly go exchange positions. This just works very, very well if you're going to go down, okay? So I looked at this big picture. The timing is very, very close. It looks like this week even possible, which I think is a bit out there, but it's possible. We talked about it being maybe Monday, but really that looks right. And when I take a look at this, on balance volume, one of the things that kind of stood out to me was this is also a widening, though I wouldn't have seen a widening here. It looks like it widens and then narrows, almost like a diamond structure. This doesn't really seem to have that same effect, perhaps. There's a little bit of a widening and a narrowing going on, but it's like hard to identify, right? It looks more just like it's widening. Once this broke out and it was ready to go, by the time it gets to this particular area, so it had made consecutive higher lows, but it wasn't looking particularly good at first. This was like very divergent because essentially the price didn't go down, but the on balance volume did, which tells you there's like a disconnect between what's going on behind the scenes. Like more people are selling than what's letting on in that case. And then the push up goes ridiculously high, but then there's no advancement. So there's a sense in which this is entering like a distribution phase with this volatility and like the disconnect. It's becoming disjointed essentially with the price action, which had been roughly the same. I mean, you can see like the movement down here, the convergences have been the same. This looks very divergent now. We are getting some similarities to that, but the big picture that I want to like kind of point out is when you observe this area by itself, there is kind of some, and I don't think you can just observe it by itself. We'll talk about this cross in a minute, but there is a similar pattern of like widening. It looks pretty much the same until this zone. And this is the first time that when we've come down, granted, we didn't make a lower low, so there is that. But this is the first time that we really haven't seen a significant weakness, and it actually made a higher low here. On balance volume, it's sort of like in step. The only problem that I have with this, and it is a problem, is that you can see here that during this initial buy-in on this kind of final iteration when the cat ears shrunk down all the way, so to speak, there's not really a strong comparison. Like you do not have the same level of like violent buy-in here. And I think that's evident obviously by volume, but also on the on-balance volume. Direction is there. It's very similar looking in terms of direction and build out. Everything about this looks essentially the same. And I'm talking specifically about this region right here, except sort of the intensity of it. Now that does make me sort of sit here and go, well, that's not really what I want to see. But even like the retracements on that, everything looks fairly similar, right? It made a higher low. It jumped over the creek. There's no doubt that that happened. It doesn't matter which one you use. It did jump over it. This doesn't ultimately run up though on the daily until it breaks out right here. Again, weird because I think that the methodology for on balance volume is that you really wouldn't use this per se. So my biggest concern right now, and it is again a very big concern that I have, is that this is like even though the price action, this is kind of a precursor, I guess is what I'm trying to say. The price action didn't actually come above. It didn't advance here. It fell short, but the on balance volume did advance. And then it backs up. So on balance kind of push resistance and then backs up and goes. So my biggest concern right now is that we didn't actually push resistance. I mean, there's no way to kind of fudge this and make it look like we pushed resistance. We just didn't. We're not even close. And it didn't even make a higher push. So part of the reason why I'm like really concerned right now about this, I suppose, is that it didn't make the higher push. And I do think that's a problem. I went back and looked at where we broke out here to see what happened. It was like, well, maybe it's, comparable. It's a little more similar to this in that this didn't actually push up over the previous top. It basically just consolidates just like the price action does. So there is an example there of like a bounce where it didn't break out early. Again, you could go back and look at this and suggest that maybe it does push resistance a little bit at the very like 11th hour, I suppose. I think you could make that as an argument, but it really to me looks like it's just not pushing resistance. Barely touches it, and then it goes. So it does have an elevated move, and then it drops hard, and then it rips. That's where I'm kind of left scratching my head. I really don't know if we're going to need to drop hard first. I get the feeling that we will have a drop, and it may drop down to 265, maybe even down to 240s. And that is almost necessary here because it's not making that higher push. So this is rising, that's fine, but it still looks iterative as a result because this is still flattening out. It's making lower highs. So if you were thinking like, well, Booksy said it might go this week, that's great. But then here he is now crapping on his own, work. I'm just telling you what looks correct to me. Like what seems correct to me is that this is having some trouble. So even though right here, again, this is divergent. So even though right here the price came higher, on balance volume stayed pretty low, you know. And it's a question of direction. The direction's consistent, but if it's a question of like highs and lows, Monday when it went up, it did not advance above on balance, and that's distinctly different than what we see back here, where on balance is already kind of in a breakout mode. Even though the price is really flat, on balance is like taking off. So the one silver lining here is that we do have a higher low on balance, which hasn't happened in these pullbacks. But and we're still rising, which is still good. I mean, we still have an advancement here. It's not like it's not going anywhere. But I think the biggest problem is that they're kind of like taking us for a ride. The operators, they're not giving us what we really want to see. And I do think that's probably intentional, that there's by design like a sort of a consolidation here that's disguising the price action to some degree. I would have to suggest that until this breaks out, you really can't just look at price alone and say, well, it's breaking out, so it looks good. I think this is still high risk, and I'm going to have to keep saying that. I was trying to find reason today to not say it. That's part of why I was doing this was like, oh, I want to see if there's just some other evidence that this suggests this isn't distributive, and it could just run and blah, 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 blah. But right now, there's not. I mean, you definitely could see that there's room here for a backup. It has not made the higher push, and it may need it. And just like this thing has this bigger, deeper backup, though it doesn't happen again, and that's kind of the bothersome part of this, sometimes it's a question of liquidity. If the liquidity is not there and you need it, sometimes you need to make that drop. And that brings me to the ascending accumulation bit. I said I was going to get back to that. When the on-balance volume is rising like this with the price action moving up, it doesn't mean that it's just going to take off necessarily. Sometimes it just means that that's setting up a buy-in, and then you have like a final sell-off. And we did see that last year. If you go back to, go back to where April takes place and look at the on-balance volume in that region, and you'll see something similar. It's not exactly the same, but it's pretty similar. There's a buy-in period here where the price is working with, just like a convergence would. It's working, the on-balance is working with it. But notice that how far that sell-off here takes the on-balance. The on-balance goes way down. Again, there's an up thrust and then a dump. Sounds familiar, right? Yeah. So there's a hike in on-balance even though the price doesn't really move that far, and then it dumps really far even though the price doesn't move that far. The price holds up, and then it rockets. So there's a sense of like advancement, but we're also getting shaken out pretty easily. And this return back to the bottom. I'm curious about it. I'm not really going to sort of pontificate or whatever the word is on that right now. I'm curious about that because I'm wondering if we see something similar. If we do drop, maybe it holds up but this actually comes really far down. That seems likely, that the price action holds up really strong, but we see that the on-balance dumps really hard and then we just rip. That would be a similar situation where you could have like, oh, it's not advancing, but then it drops. The price doesn't drop far enough. Maybe it doesn't even make a new low, even though it looks like it should. But this actually drops down really far and then it rockets. That could be bullish, at least temporarily. It ultimately represents an SOW though, so that's important to note. If this comes down, we had suggested yesterday like 260. If this comes down to like 260, okay, and it goes next week after that. Well, so for example, if it dropped to like 260 something right here, and then it goes next week after the fact, right? You would say that, and if this drops low, you would have to say, just like what we saw in April, that's ultimately like a temporary move. Because if the on balance dips from April 30th, like that low right here to the new low, for example, if we went to 260, then, and this is an if-then statement, of course, we don't know for sure that's going to happen. But if that were the case, that would be not a good divergence. Like in the long run, that could represent a really serious sign of weakness. And I think that's the whole point of this, is like that could be very much what happens here, is that you get a weakness here and then it breaks out. You didn't get that weakness back here, not really. But in the current example, we do see it back in April. Like there was this drop back down and it pretty easily flushed back to that value before it pumps up really, really far. So that's just an example of one. Now looking at the outcome here, does the on-balance volume movement here with this price action support this idea? Yeah, I think it does. So there's a build out on the daily, again, where this hook is. And this is a little different than the comparison to 2020. I know we've done that one, but we also did that on the 4 hours. So this is a daily comparison. When we look at this comparison and we look at the on-balance volume, we can see that there's this kind of wave that's being ridden to the top again. And then there's this really long period, right, which I call the cat ears, which has this kind of distributive elements to it. In this case, it's actually holding up pretty well. If you look at the macro, this looks pretty good. It doesn't even drop below the lows. This one's already come down below the lows. So I'm not wholly convinced that it's even going to hit this level again, to be fair. But I do think that the elements of like wave analysis are here. So I've got it drawn as like a just a simple curve. But I would suggest to you that it's very likely, and I haven't done it yet, so I'm going to do it right now. Because I was thinking about it earlier and I was like, well, I'll just do that when I get on stream, that kind of thing. Yeah, and I don't know exactly where it is. Maybe from this bottom through this top, because you can see that this drops below it, but there is support on there right here. That does, to me, indicate like a very simple like understanding of this wave breakdown in terms of a cat ear. I probably could have fudged it, made it like an S-curve here so it fits perfectly. I'm not going to do that. But I will say that if that's the case, you actually have a fairly one-to-one comparison right now because, and it's not the best, it's not like the best news ever, because there's similar regions here that are at play. So when I look back at this, I would consider this area to be the same as what happened in February. This is like a repetition of the fractal. We've talked about why I think that is, but this is essentially one. This is essentially another one right here. So while I could do this and grab onto this, which is very, very low, right? That would suggest it only comes up to like this particular level, which is possible. I'm not saying it's not possible. It doesn't interact with anything else, and it really doesn't match, because if you look carefully at what we just did, at least in this particular example, this area is not the repeated iteration. It's not the first, it's not that cat ear again. It's not the big LSPY type deal again. It's actually at the bottom. It's actually at this breakdown. It's where this was breaking down away from. So it's a sort of 50-50 marker. And you can see where that is on our current time frame pretty easily, because the 50-50 marker is where we think we go back to. Subsequently, that's what happened here as well. It does like a 50% retrace. And we think that might be the case. And that 50% is like right there at like 4. So you can see that area. And it's reasonable, I think, then to consider that as the likely target. So that's probable, I think, as that hook value. I don't think there's a better one. And again, there's different ways of interpreting maybe where this is. We're not going to go into every single potential here, but I would suggest that it's kind of baked in. So one is right here. That's a possibility. The other one is right before it, which is this first low. And that's the only other possibility that we really have. So I'm not going to use this one. I don't think this is as relevant. I don't think it's the same. I think it's one of these two. And that's probably all that she wrote about it. When you look at where those intersect in our given time frame, it could then be reasonable to conclude that, especially given the fact that we haven't left yet, this is where it is right now. So there's no other timing, like there's no other place it could go to stop. It would be between, well, on this chart on the daily, this like 1 billion level, essentially, up to like 1.04 billion, which seems to be used more than once. So all that being said, does this seem like a reasonable place for that hook to take course? Yeah. I don't think it's that complicated. It seems pretty straightforward. Going back up to near a billion again on the daily. And that seems to be the case 1, 2, 3 times here that it did it. Just like back here, it came up multiple times and tried to get close. This was more like 500 million, at least by comparison. But we also had a split, so whatever. So there is a low possibility here, right? But then for the most part, it's in the same kind of idea. Like this is the low possibility, really. It's pretty low. It would have to be like right there. Like here. But then everything else looks like it's sort of in the same bracket that we might expect, like a return back to this top. So what does that mean? Well, I'll tell you what it means to me. I can't tell you what you have to do with that, but what I would do with it personally is I'm going to be looking at this saying, well, once it gets to these zones, this is kind of like my sell zone. And I know that some people are going to like scoff at that idea because they don't even think it's going to come down again. I do, though. I think it's going to come down. I don't think it's going to look like this, by the way. Some of you are probably looking at this like, oh no, it's going to fall off the face of the earth. Remember the shift? Well, the shift matters because if you look at this as a schematic of pattern, the shift then determines a much more reasonable expectation, which is coming back to, you guys are going to like this, but the shift actually makes this look very reasonable because it's actually just coming back and making a slightly lower low, and then it's making efforts to traverse the bottom, but it's having to do the schematic again right off the bottom. Interesting, right? Yeah, I think so. So if you actually use the shift value, which I have the formulaed one here, but I just made a copy of it. So just so you can see it, there it is. And then I just erased it because I didn't want to see all the extra junk on the screen. I looked at where this is. This is very, very fascinating to me because if you look at where the shift value is, what this represents, us going back to, and I kid you not, that's 461. The 550 or the 1057 level, and then slightly below that is where that gap is, and that's where the little spring was in 2021. Those would be the levels that we'd be checking if we do an up thrust here. What? No, really. I mean, isn't that crazy? So it's essentially like looking at this. I put the marker here. It's this little gap that took place around 461, and it goes down to like 440. Which makes sense. Those were the levels that we saw heavily used during the point and figure chart time when I was looking at point and figure. That's pretty darn close to that 431, which we were identifying as a high probability target. When you look at this with the shift, that's actually a back test on previous all-time lows, which we haven't made. We haven't done it. We have not gone back up and checked them. You might think that we did here, but we didn't. We just took off and we kind of slid through. That is super critical. If you're going to make a lower low, you're going to take it back up and test the bottom again. It makes perfect sense. I'm not going to say it's guaranteed because that'd be stupid, but it really doesn't, it makes no sense to not do it to me. Even back here, this is what was done. I mean, if you look at it just very plainly, in terms of like, you guys are, well, I didn't take the low back here, didn't go all the way up. Well, it already had done that, right, twice. But this particular move going back up to that like centerfold region where this consolidation was happening, and just check out the comparison here with the centerfold region. This looks so much like the same exact thing. And then look where that shift value is, where this is like the centerfold region. So even in the cross comparison there, which may get a little bit muddy, I guess it muddies the water a little for some folks, I think that that makes perfect sense. I took this and I was like, all right, well, where are these levels at, and are they reasonable places in the current time frame? I just copied and pasted it down here. And this is 450 to 460. And then the lows in coming backwards, this is so weird. And I know this, you guys are going to be like, what? I saw this happen before and I didn't know what was going on. But for some reason, like when we move the chart, I don't know why this is the way that it is, but if you take that bottom from the shift chart, it's like where the middle is on the current chart. Which means that these values, I know it doesn't make any sense, but these values are like checking themselves, which is weird. It's like this is actually checking the bottom, which doesn't make any sense. I mean, if you just said that, you'd be like, that's the dumbest thing I ever heard, Booksy. But if you understood what I mean when I say that, like in terms of like that valuation method, it's really bizarre. So it's like super strange. I think it just has to do with the multiple that was chosen. Like it's an even multiple here. So they split it up in a way that it seems to interact with the same levels because it's an even multiple. Like that's why this interacting with the bottom looks the same, obviously, as this interacting with the bottom. But then from there down to here is like halfway because it's like a divisive multiple where you're getting like multiple. You get what I'm saying. So it's like an even division. It's like if you broke something into like quarters and then you shifted it all down, it would be checking like the same values. So I see this as a very high probability target because of that. But also it's like weird because when you come back down, that valuation, that triangulation here, this is so strange to me. And I don't know why this is. But that triangulation, again, I'm using the shift chart, which is right here. I'm going to bring it actually up. I took that and I was like, well, where does that even go? If you do that, I'm sorry. I'm like stuttering over my words here. But I was like looking at this, like, that's so weird. Like, why is that the case? This almost doesn't make sense to me, right? But it's actually going to the same level, which is really bizarre. You're like, really? No, it really is. It's going to like 430 right here. It's a very strange phenomenon. I don't know why that is. It hurts my brain. I don't really fully understand it. And then you're going to, I guess some of you will like this, some of you won't. But after that marker, if that happens in this time, that actually goes down, if you look at the same marker, to the 188, 190 area, which is the one that kept coming up. This presents a bit of a dilemma because, and part of me doesn't really understand it, because there's this, again, this strange reality of like, is it necessary to have that intersection here? Why? And then what would be the implication if this is like a pivot? Because that would indicate that this actually doesn't come up till then. That's a really long-winded motion. Now, some of you are going to be quick to point out, well, you just said, yeah, I know what I just said. I just said it was probably going to take off, right? But let's say, for example, it didn't take off till like June 6th, and it did run up, but it only runs up to like 450 or something. It's like inverted, right? Does it still have the same expectations? Maybe. And this is where things get kind of odd, because the timing for everything else is largely dependent on where this move begins and ends. I divided it into sections earlier today. I was trying to see where this intersection was. And it's on June 18th, maybe the 16th, but it's like around that time period. Let me explain why that's bizarre, and then I'll kind of let you guys decide what you want to think about it, because I don't have an answer. Here's why that's weird. When I went and looked at that recent bottom, there was a double bottom made and then a creek jump, right? So what I was doing a very simple, in my mind is simple, but I was doing a comparison, and this is not the right chart, where that jumped over the creek on that other, area where something similar happened. And both cases, or in all cases, like that's where it is. Like it's right here. It kind of breaches it and then it pops over. It may be a little bit further along by a day or two. Here's why this is bizarre. Because that intersection on the 16th is actually like halfway between earnings and where this bottoming section is. So if you go to where that intersection is, again, on like the 16th, 17th, or 18th, I think it's the 18th, and you draw it out to where earnings is expected to be on August 6th, and then you do doubling the value, look at where that low is right here. And then again, like remember what we just said, that's where it makes the bottom here on the on balance. It's not a, I cannot stress how like that doesn't seem like a coincidence to me. It seems very intentional that now is split in half and that those coordinations are exactly halfway. So part of my concern, and it is a concern, part of my concern is that we're jumping the gun. And I'm not going to go beyond this right now. You guys are probably irritated by what I'm saying to you. I get it. Because you're like, well, you just said, I know what I just said. And I agree that from like a fractal standpoint, if you were just looking at a compression, the timing makes more sense to run like now, this week or next Monday, as did most other things that we looked at. But this method, which is very subtle, it's a small way of looking at things, this would actually indicate this could be a pivot. And if it's a pivot, then it doesn't necessarily have to be that that's where the low is. If you divide this in half again, so let's say you take this and you divide it in half again, so you go from halfway to halfway. So now it's a quarter system. Not really too concerned about where the top is, although if the top's up here at 461, that means the middle between these two values is indeed $3, which is exact. Well, that doesn't surprise me. That seems purposeful. That would be the center mark here on this double flush, that you'd have a flush and then a middle mark. And it also makes sense because if you come back and you land here around 3, you're now traversing the same regions we were expecting you to traverse based on all these other different, angles and junk that we pointed out earlier. We did that earlier. I'm not going to do it again right now. It's on the other chart anyways. So it certainly makes sense to me that that would be the zone that you'd come back to, and that's like a 50% marker on a potential bigger S-curve down. What if that's the pivot, right, Booksy? Does that mean we hit there on a high? There's two options, usually, okay? Usually. When I look at pivots, so like number one is that actually is the high. It's like completely inverted. Number two is that's actually the breakdown level. This is a little odd, but I have seen it before. And I guess there's three options, because number three is it just hits there perfectly, right? It's already there. But a lot of times this is like an indecision value. So it's not that this is a pivot that represents a high or a low, but it's a pivot that represents directional change. It does seem possible because when you look at the larger schematic here, and I kind of found this, I don't want to say by accident, but I used that widening, and I haven't used that in a long time. And I just thought, well, what the heck? Let me draw like a midline there and see where it goes. And the midline actually goes right to this. I mean, it's not perfect after this point in time where the split happens, but it's like right here at like 2250. It drops from there. And it does come back through it in the big run up, but interestingly, it actually barely pokes through it here as well when it went up to like 548. Okay, well, does that mean we're not going to get over that value? That midline's at 333, Booksy. Crap! I don't know. Maybe all of these are true, That would be such crap, but maybe all of them are true. Maybe we get a push to 330 and then we dump down to 226 and then we rip to 4 and then we dump down to 188. I can't be 100% sure about anything, but what I can say is that intersects this region right here, which is also in the same pocket. So I'm like you can't see me, but I'm like shaking my hand back and forth like, well, it could very well be that that is a pivot. And my expectation is that it could be these extremes, which are very opposite, right? But it could very well be that that's not really what's going on here, but rather what's going on is that you are going to get a move, and then this breakdown, maybe the midway point is better described as like cat ears or something like that, where it's like a diversion point. And then you have a breakdown that occurs as a result of a cat ear distribution there. That is possible because we have seen that before, where the pivot is not even a high or a low. It's really like a drop zone. Neither of those is going to help you make the most informed decision in the universe. I get that. In some ways, this makes a lot of sense to me because it maybe even makes the most sense because if you think about where this is on the grand scheme of things, this is that middle. Most roads lead to the same place here. Most roads, no matter whether it's this upthrust and dropped or whatever, even if it were to continue to run, right, you still have to come back over this level. Why? Because at the end of the day, like on the biggest possible schematic, you have to hold a support there as a breakout for 100 different reasons. And like the more of the obvious ones, I guess, would be this downtrend here from the two peaks. And this is one that I guess we've talked about it a few times, but it's like, it's right there. Like you have to hold that and then break away from it and break back out here in order to continue an advancement. So there's almost like no situation that doesn't bring you back. If there's an upthrust here, there's almost no situation at all that I can think of unless it just takes off to the moon. That's it. There's no other situation where I can even imagine this not going back to this level. So now you have an intersection here of like so many things. Like we just talked about it on the other chart, but there's this really long standing kind of middle here, like a consolidation zone. There's this downtrend from the last two big peaks. There's this macro middle on this widening. We've got all the 330 markers we already talked about today. This is like a pure and simple, like as you can get anchor point. So my thought is that there might be some kind of a combination of things, you know. One potential would be that this doesn't run up until here and then it really goes up high and blah, 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 blah. But anything else that could be said about it probably would have to be said about this 330 area. So you could build out to that 330 and break out, or drop down, build out, break out, or pump up, drop down, and then break down, or pump up, drop down, and then break out. You know, like all of them revolve around that midpoint. So it's not even that complex in some ways, but what I would advise that you guys, I'm going to do it. I'm going to keep it on the chart, at least on this version of it. I can't tell you exactly what to do with this, but I think the quarter system tends to be pretty reliable. It's not perfect. Gann used it because it was a fairly reliable system. Sometimes it's like right on the money, you know, perfect. Sometimes you're going to get off by a day or something, but I'm actually thinking that this should be divided into quarters, roughly. It represents slightly different days of the week. They're not all the same. But I think that whatever we see is going to be built upon, whatever this structure is going to be built upon this quarter system. How? What do you mean? I'm not 100% sure, right? Maybe it's a rotation, and I don't know how to do that better, right? A rotation would look like something like this, where it goes up, and then this is like a breakdown period, and then this is sideways period, right? I don't know. This is confusing, but this could be like a middle of the rotation. I don't know. This is an awkward way to do this, but bigger rotation, and then a smaller, you know, downward pivot. This is how I would do a rotation here, because this would fall right on the opposite side of that. So this would end up being like a perfect rotation around the center. So that ends up being like a pivot instead of it being a high or a low. And then there's a rotation around 330. It kind of makes sense. And then this would be right on the opposite side of that quarter, which is the same way. And then you'd have a build back out maybe into earnings. So it hits there and maybe it doesn't stay there. You know, everybody thinks it's going to stay there or something. And it actually comes back up and then builds out this way, just like this built outward, downward, something like this. Probably wouldn't be that extreme, but you get what I'm saying. Yeah, it'd have to be like that. This could build back up to like 250 or whatever. And this is where it finally comes back above. Just as an example, this could be where it finally comes back above the... So this is a way of understanding like Gann rotation, which I don't think this is necessarily what happens. I'm just saying like if it accomplishes the task at hand, the operator might use it just by the nature of the fact that it's like pure and simple rotational symmetry. And we have seen the rotational symmetry play out. I don't like calling it out because usually when I call it out, it doesn't happen. So I've called it out, so this probably won't happen. But this would make sense. It does rotate really neatly around 3. It gives you the hits on all these interactions. It's pretty close to what you would expect here. Anyways, it looks a lot like the other iterations. So it's got like the hook level right here with the drop. And the only thing I guess that would be kind of awkward about it is like, I don't know, maybe this part. Yeah, this would be like an extreme, this doesn't look quite right. You'd have like an extreme drop to start, maybe down to 320, then break down here. That makes sense. Then you back up to that level, break down here, that goes to a new low. So it's like weak. It goes through the low, or it doesn't even have to go a new low, it just goes low. And then it goes back up, checks 3 and checks that level. Then it walks down here, checks that level, then it drops. That's a rotational symmetry. So it's the same thing on either side. If you rotate this like a hands of a clock, it'd look the same. So the breakout would be right at the place that it comes back to, which is actually quite high. But it starts here. This is the only part that I wouldn't really understand what to do with. So presumably this comes up and then goes back up to, it's kind of confusing, goes back up to here. And then that would be the break of this. Or it dies and death happens. Then you have like a squeeze motion. There probably would be some kind of a backup anyways. It wouldn't matter. It's earnings. It would go back down and check like 238. Yeah. And it checks 238 or whatever at earnings. 239 at earnings, and then it just takes off. That actually works quite well because you'd have a creek right here that you would have jumped over and you'd have to back up to test it. Kind of like that one. Anyways, so I'm going to keep this as a division. I don't necessarily think this is verbatim what happens, like exactly, but it actually makes a lot of sense. So I might keep it on the chart anyways. Yeah, that works really well. And then you take off. It could be right before then. It's always important in my mind to think about earnings as a catalyst, right? So you can see at earnings, this is actually at 226, which was the equivalent of $1 because of the multiplication on the extension, or excuse me, on the chart shift. That's actually $1 valuation wise. So this would be like dipping beneath $1 and then checking $1. If it hit 226 and then checked on the way out. That could be it. That could be the spring motion right there. Actually checks out pretty well. Well, anyways, I didn't really think too much hard about this. I always thought it would pump up and come back down and then eventually get to these levels. But this does give it kind of an interesting or even compelling case for how it gets down there. And then it ultimately checks this level, which makes the most sense to me anyways, this guy. I've said in the past, I'm not sure if it gets all the way there because that's the on balance 4-hour key level, like here, here, and here. But I don't know, man. It looks right. It looks like it could get there. That does make the most sense to me. Right in that pocket. Timing, very speculative though. So I'm bullish on AMC. I do think it's going to go up. I do think it's going to hit near 4. I don't know how much of that move we're going to actually see. I do think that it's in a period right now where it's trying to break out, but it's still got these weird little nuances that make me think that it could drop potentially. Yeah, there's just strange stuff about it that I'm not really sure. You know, and if this did drop, that changes the rotation, right? Because, like, let's say this dropped down to like 260s or even lower, and that really changes the nature of this because it kind of makes it seem like, well, when it comes back out, it would overextend, right? And then come back down. Would it? Yeah, it would. It changes it. It would go up to like here, like 330. It'd be like this. And then it would come back up again. And then do that. So, I mean, that's a possibility. Maybe that's by design, you know? Maybe the idea here is that they're going to get it over, if this is like 296, what's the distance between there and 296? Let's just say bare minimum, it has to go above 296. So let's say 297 to 239. I put 237 there. I think that's wrong. It should be 239. I'm curious. That's an interesting number. Because, like, what if that's the number that's needed? I want to say needed, like that has to happen. But, like, what if it is? What if they are going to do a rotation and they're trying to ricochet off this so they can get the appropriate number for that reaction? I don't know why they would need to do it like that. You might think that that's silly. But I'm being genuinely serious when I say that. Because sometimes, for whatever reason, like, I think this position, if this went down, would be like exited over here or something. Like that length of space would be mimicked somehow. I don't know why. That's the way the rotations are. They always kind of like 1-to-1. That would be something to think about. And then it's offset to 239 to get a back test. And then you don't really have to come down that low again. You could stay up after earnings. You just have like a simple breakout. Oh, Booksy. That's the next iteration, dude. It's doing the same thing again, but this time it has to have a change of character. So this is the same iteration. Like this whole area right here is then replicated. We were just talking about this because it's the same thing as the big picture right here. It's the pump with the cat ear down. And then it does it again, but it does it like small version, little guy right here. This is the one that has to change character, and it's a backup because if it does this, it has to back up and hit the I'd have to just change direction completely. Either by just not going down again or like not making another low. Or better yet, I don't think that could work. it could be like this. And so the next iteration is like this much wider version of this, but it ultimately ends up being really high. And that makes sense because you're going to have a final buy-in. You have to have that. That's always there at the end. This is such a distributive looking thing. It just seems like it would never end. But there'd be another one. There'd be one more. So this one may go low, but then there'd be like another one. This is the one that changes direction. You know what's crazy about this stuff? And aside from just me being crazy, what's crazy about this stuff is that it will work out. Like if you sort of see it the right way, it will end up being correct in the end. If this iteration pops above the previous, then this iteration will pop above the previous. And then if it goes down one more time, it's like, you see how it's starting to like wrap around the same markers? What's crazy is that actually gives you, at this point, because it's now shrinking down, is going to give you like an appropriate creek jump back up kind of motif, which is crazy. This is what boggles my mind about this kind of stuff. Is like, it will give you what you need if it does it right. So this is like a rotational symmetry, which you're already kind of like, well, I don't know what the heck that is or whatever. But then if it continues to do the same thing, but it starts changing character, this is where you now see a buy-in because the bear case is now weaker. Yep. So it's doing the same thing, but it's doing it like in a compression mode. And it starts looking like that that 1, 2, 3, 4 business that we have. And that's finally where it like hits bottom and it just goes. I don't know if it's going to look exactly like that, but it would be like the next one is so minor that you probably wouldn't even like see it. And then it would just be compression up. Creek jumps all the way. Creek jump, creek jump, creek jump. Look where that moving average is. It's going to like bring that moving average down to near $3. So each of these spikes then works its magic by pushing through that and checking it. So it checks that daily moving average, iterates again, checks the daily moving average right here, iterates again, checks the daily moving average again. This time though is different because when it does it again, it have to go really far. So what were you trying to measure, Booksy? You were trying to measure like the minimum distance required. I think, I'm not positive because I don't know where this top is going to be, like exactly. But I think this low of 295 is probably the best number that we have. I know that 3 is easier, but I really think you got to just use what you got. So I think at minimum it has to be, like it's got to be there. It's got to be above 295. So I think 296 is like the lowest variable, which means that the distance between, oh, you'd have to have the end though. Shoot. We're not sure if it's 461 or 430. Crap. Well, I guess it doesn't make a huge difference. You just have to know from the current top down to the floor. That's the measurement. If you're not sure what I'm doing, I'm measuring the rotation to see how far it would need to go so that on rotation, when it comes back above, it exceeds the top. So that's 45 cents away. It's not that far. I mean, that works, because then this takes you back to that creek, but only if you have a creek there. You need to go back and retest the bottom. But it has to go far enough. So I need to do this one more time. So that's a possibility, but I think I have to do it at least one more time. 239. One more way to 296. So where's the top here again? This is only in the case of rotational symmetry. So if you're not tracking with me and you think that 284, if you think it's not going to do this, then it doesn't make a huge difference. But it looks like it goes back to this marker here, which was the creek prior. I feel like we checked it. We've already hit it twice. But it is logical. It's kind of the same zone. That's 230. That's not way off. That's actually pretty close. That's 229. That's pretty close to what we were expecting. If you remember when we did the analysis on the downside, it really wasn't that big. It was like the farthest you would need to go is like 229. And that was using these iterations by themselves, like just talking about how this sets up right here and how it pinpoints kind of where that low is. Except the problem that this is really wide. That's the only issue here that we have, and it is very wide. So that might imply that you don't even get to the bottom until the 28th. Which is really slow. Well, unless it just breaks it. This one didn't break it though, so I don't know why you would break it. It doesn't make sense. What I'm talking about is this. There's a final creek here that's not broken. I mean, it's pretty solid. The jump is there, and then the retest is there. So we're saying that like something similar happens here, potentially. It's already come up high enough to do this. The oddity about it is I guess that wick level. I don't know, maybe it doesn't really respect that anyways. I thought it was like right there, but it doesn't. Looks like it goes above it. That's a bummer. It'd be easy enough if it were like the same, because that looks really tight right there. That one's really nice. It doesn't look like it was that respected, so there's other markers here. Maybe it's the second low. That's possible. Because there's two markers here on bottom on the daily. It's one of those two. It's either this low or this low. This one's not really relevant for this purpose, because this was like where the selling climax was, but then it's like, where does it find support? Both of these are kind of creek jumps in and of themselves. They're just slightly different. So they have like slightly different aim. Yeah, interesting. Where does that intersect the value we just talked about? What was the number? 229? That's really fascinating, because that's like right above the $3 or the 226 level. Where does it intersect 229? Monday. First thing. Have to be some kind of dramatic move, right, to get there by Monday. But that is where it is. It's like right on the daily intersection. So that makes sense. Monday the 19th. And Wednesday the 28th. Yeesh. I'm not even sure we're going to go below 265 still. But if this drops 265, I think it's pretty much a given. It'll come down below this value and this value. I didn't think it was a given it'd go lower than that. So there's a little bit of a question mark there. Why not? Why not go to a new low? Because it doesn't really need to, like not in the way that I don't think it does. Unless there's like a bigger wave that I'm missing that needs to drop lower than the previous bottom. I don't know. I have no idea on the macro where those Elliott waves are. It's 6 cents below or 7 cents below. So here's what that would do on a rotation in essence. Is that I guess that's a little bit of a weird roundabout way to get a number. But if it went down there by Monday, which is very low, it seems improbable or maybe even impossible because of where we are and there's no breakdown just yet. But I think this is already starting to show cracks because it's having some trouble. Sideways is not good enough, you know. And there was a wick here, if I recall right. There's a wick to, yeah, it looks kind of ugly. I don't know. It's not quite there, but I think this one already is broken. It is. If it's not, it's like right on it right now. And then the next one is there. Are turnover and OBV the same thing? I don't think so. On balance volume is a way of describing accumulation distribution. It's a very simple way of describing accumulation distribution. It's pretty effective based on direction. It's going up means more people are buying. It's going down means more people are selling. Pretty straightforward. And to that end, it could be compared to a lot of things, but it's generally thought to be one of the earliest. It was developed in like the 60s or something. It was generally thought to be one of the earliest ways to determine what money flow was, like where the flow of money was actually going, and that usually is institutional. So if there was a disconnect in on balance versus what was happening in the price, the idea was that institutions are setting people up, basically. Yeah, it can't, if it drops 265, that's definitely the level. I think if it drops through there, it's going to dump down to, it may go as low as 229, but there is a question mark there about that because I don't really know if it has to. That's a big question mark. Some people think it has to go down, and they're going to stick to their guns until it does or it doesn't. But I've been sort of indecisive about it. It's very close to dropping off the edge of the earth right now. I'd be curious if this drops, what happens with the on balance, and then whether this goes all the way down or stops short is another question I don't have the answer to. Because like we just did the diagram, and it was like one of them was like, oh, it takes off as early as Wednesday, which is tomorrow. It's like, that's kind of ridiculous, you know? This other one seems a little slower. Some of them are really slow. These two lines are probably going to play a big role in this, so they're not irrelevant. Usually the last trajectory markers are pretty significant. And then there's a third one, I think, right here, which is even lower. Yeah, so these three are all defining like future price targets. Weirdly similar to what we see over here and here. So it's very strange to see those like interacting already, even though they're not even, we haven't confirmed a rotation. If this went down into the 16th, Friday the 23rd is the third week. Then Friday the 30th is the fourth week. I wonder. And then the quarter system here is Friday the 23rd. I wonder if it's that simple. If it just runs into the quarter and then runs down. It might be. Why is that on the like right side? Yeah, I don't know. On balance might not be a good one for this because I think it's cumulative, so it would have updated like the next day, even though the price already came back up. I'm really concerned because this isn't over the top yet, and then this one wasn't either. It's still iterating. It does still look a lot like what we experienced here. Just kind of dangling on the edge of a drop down. I'm curious if it hits a low on Monday. We were thinking it goes up, and then it ends up breaking out, and you get real breakout volume going into Friday. And that's a 4-day weekend. And then Tuesday, something like this. So then Tuesday, you actually get a breakout. And that's the third week. Kind of seems right. I hate that. Keep changing the time, but it's just not doing what it needs to do, you know? Like there's bits and pieces that are there, but then it's missing certain things. That would make sense. And that would probably signify like a bigger breakout. I have the other chart for that, but I mean, we could probably use this here all the same. Yep, right there. So if it did this, it gives it enough time to kind of come back up and have like a proper breakout. Sheesh. Waste all my money rolling all these options around. I don't know exactly where price would be at this time because I feel like at this point it's already checked so many things. It'd have to be, and it would be this really tiny. This goes back up. I guess the first reaction would be this one, right? Because that's the iterative reaction. It goes back up to the recent low. But in our case, and it even goes up higher than that. It actually goes up to, it could be going up to here because they're both the same in this example. They're both that low and that platform before the drop. But there's both. There's like an auto reaction and then a push up higher. Oh, that makes sense because if you came back up to the platform before the drop, the platform is this 265. But the thing is that coming back up to that platform with an auto reaction gets you back above the previous low. Whereas previously, AMC, when it came back up, it didn't go back below the low because this dipped low. So this always set up too low. If this had set up higher and it went up, it would be above it. So then the next iteration here actually comes back down Friday, but it doesn't go low. It just travels through here now. presumably back to 245. It's hard to describe because I wonder if there'd be there'd have to be a new creek here, I guess, at that point. So pushes up again, comes back down to that settled level, but we don't know where that is. What's a retracement value from 229 to 265 or 266? A 50% retracement is 246. Okay. So it comes back down to 50% retracement. We go right back to the bottom here. I think it has to run here, though, if it's going to run, because I don't know where else you'd put it. If this gets stopped, and by the way, I think that this is an ugly run still, so I don't think you're going to see a lot of the noise if this occurred. I don't think we would see like the breakout and stuff. It would just be like suddenly like way up above. And I don't know what would cause that news to happen. Don't really care. But if it goes down to 229, it gives an adequate reason when it comes back up to invert that value and go above 3 or above 296, which is necessary if this gets hooked under 296, which is highly probable given the nature of like where these distributions are. Usually then if this drops down, some of you are like, well, why not just wait till the next week and just keep waiting forever, Booksy? Maybe it is the pivot. I don't know, man. I will say this. At this point, I don't think it's wise to play any kind of options that expire before June 18th. I mean, it sounds ridiculous because like I know you want to catch the most and get the most value, but especially if this drops, it's going to be like crap value anyways. No one's going to want those options when it first drops. So you're going to make money regardless. But I really think that beyond this midpoint, so if you were doing like a weekly, it would be by the 20th. And maybe even just for safekeeping, just go to the next week. I know we're pushing it back, but the truth is very simple here, which is that this particular setup looks primed to go. If it takes off, it's got to do it like Monday. But I think if it's going to take off, right, it could be Wednesday to Monday. But I think there's a case right here to be made based on everything we did today in this rotation that this may not go until the third week of the month, which is a bummer. But it is what it is. And we'd have to completely redo the diagram, but it would be similar. It's still pretty much the same thing. You'd probably gap up Tuesday, the 27th, and then come crashing back down. But this time, you'd be going through this value. Dang it, man. Sorry, I'm just noticing like that right there. That flattening is the same flattening that we have like here on the bigger picture. We were talking about that a little while ago. There's another kind of a trend here that's like a widening. See that? That flattening hasn't finished yet, but it's hit 3 times, 1, 2, and then 3. It would finish right here. It's part of the reason why we're having so much trouble, but there's another one right there, which I didn't really notice till just now. So I don't know, not good to not notice that, but I didn't notice it. So now I'm looking at it, I'm like, oh, it's right there. It might even be a parallel structure just to keep it simple, but I think there's I think there's one right there. And then there actually should be another one right here. This is going to get like hyper compressed, but there would be another one. Dude, it's totally parallel. I'm not even like trying. That's the same angle. There should be another one right here, and there is. Right there. Where's the other one? It's not here yet. I don't think it is. That's 360. That's crazy. Yeah, it's compressing though. That's a good sign. I think this actually might be an outworking of that, so. Because I believe, if I'm not mistaken, I believe this is like the last. I gotta think about how I just did this. So it's the middle left here, middle left here. Yeah, that's right, going back. Brain farts. It's got to be this one. This is it, because it comes up again and then it drops, and then that is a change. It pushes up. It already is changing. I think it's already doing a change of character to some degree. See this push up right here? I think, weirdly enough, that's the same buy-in. I think this is also, I know it sounds really bizarre. It's just like kind of confusing, but it is the same as this, but it's also the same as this. It's confusing as all get out because there's a another iteration here. It's like a compression. It's like a xylophone or whatever you call it. Not a xylophone, but a accordion. So there's no guarantee that this has to go super, super low. We just want to see that change. So what we don't want is we don't want to have this kind of bounce out, cause another one to happen here. You wouldn't want to see like another like fake out that doesn't do anything different. At some point, instead of building downward, it has to build outward. So each one of these is getting smaller, but only marginally. So the difference between this and this, and this and this, it's not significant. Which kind of implies that the next one, of course we don't really know. It could be like parabolic. I'm using like a linear function, but maybe it's like parabolic. The next one would be like here. So after it pops, it has to, like I'm just saying, it has to change character. Like you wouldn't want it to do the same thing over and over. Yeah, that actually works. It'd be like right where the intersection is. Which again makes sense because you wouldn't want it to come back beneath here and like compress again. And then go into some silly, ridiculous. This one went back to the previous one. So this one might go back to the previous one as well. That's a huge differential though. It's like higher. This doesn't go back to the previous one. This one does. It's already changed. That's what I'm trying to say. It's already changed character. I was kind of like trying to blur my eyes and think about it objectively, and it's like it's already technically come up higher than it should have, because it really wouldn't have made sense to go up more than like here maybe, or even here, and just kind of fail to advance. So it's already done that. Yeah, it's pretty interesting, man. Do you say so, Booksy? Oh, I do. Yep. I think it didn't, because it didn't go low. So the reason why this one got stuck underneath here is because it went really low. It went beneath the previous bottom, and then it comes back up and gets stuck. This is looking at the iteration relationship. This one didn't go low though. So like if it had gone low here, it would have been like down, who knows like how low it would have gone. But I guess you would have had, say, gone all the way down here just to make a new low. Then that move out back to the upside would be like really low. You know, it probably wouldn't even make a higher high. But you can see why. It's like it's only got to come up to here now. Just like this one came up to the previous. But instead, it doesn't make a lower low. It makes a higher low. Which tracks, because why that would be different, because then when it comes up, it does go beyond. It actually goes to the previous. It's interesting because that's correlating to what we already see as like resistances anyways. Like there's a lot of resistances there anyways. But this especially is interesting that it's now like pushing up right there. Like it's trying to go farther. So it's already changed character. Huh. And then I actually adjusted this marker a little bit, so I need to change it because I pushed it up. It's closer to half. It looks like a halving system. Ah, it's half. Of course it is. I'm telling you, man, 99% of the market just cuts stuff in half. Like, it's super boring. Half the time I do this stuff, you're like, half, there it is again. I'm really serious though. Like so much of the time, like I do stuff, it's like halves. The halves markers are always like the key. It's already there. That's the line. It already exists. All right. Well, see you in 10 years then, I guess. What's the point in saying that? It's like saying like you breathe air or something. Or that you live in a world. Like there's no point in identifying things that don't need to be identified. They're not constructive. There's nothing constructive about saying I breathe air, guys. Like, well, everybody breathes air. They've held it off. They're not holding off anything. They're just playing the game. But you've already like fatalistically decided that they're never going to stop playing the game, or that their game is not to eventually go back up. So we're already like, we're basically in perfect disagreement already. So there's really no point in making that assertion. Actually, this does give a lot of credence to the idea that this doesn't go below here. Potentially. I cannot stand that. Like, I just don't understand it. Yours is a name that I recognize too, but, and I don't want to be rude, but I just don't understand that. I just never will. You know, if it's not for you, then just quit. Like, don't trade the stock. Trade something else. There's tons of stuff to trade in the market. Been trading stuff. I just can't understand it. I do not understand the just the constant. Well, if they already done this, like, okay. I've actually changed the last 4 years. I'm like a completely different person than I was 4 years ago, in some ways, not in all ways, but in some ways. And as a trader, like, absolutely, completely different person. You know. It's like the people that don't change, they come back and they're like, hey man, it's all garbage. It's like, well, okay. You know, like, what do you want me to say to that? You're right, so we should all just quit and give up? Or just there's no point in charting it? I don't know. There's no real rhyme or reason for that kind of attitude. If you've already predetermined that you're not going to make money on this, then, like, there's nothing I can do, you know. This changed character, so I think this would change character. It does have the appearance right here to me of like compression if it does go down like this, and there's a good chance that this is then, if it does go that low, which I'm not positive, but there's a good chance this looks like a hook. But I gotta say, like, that's a very similar setup to what we experienced back in 2024. So here, where there's a similar constant here, which is there's a similar reaction every time. But when it gets to this one, it's changed character. It's no longer bearish. It's bullish. It's already made the move, and it is essentially sitting up underneath. And it could have been a hook, I guess. You know, if someone could have looked at this and said, well, they're never going to change. It's never going to go up. And so then you'd be like, all right. But that necessitates that this is somehow bearish without even knowing it is. And I think there's a good chance that similar kind of structure happens here if that happens. Yeah, it looks the same. It would be like nested underneath, basically. But I think because, again, this changed character and coming down, I think there's a reasonable expectation that it might do that again. And this time it doesn't go below that floor. That looks like a spring with a retest. And it also looks a little bit like that 2000 model, and then, or the 2024 model. And then you have a compression here. So this is very long-winded by comparison to what we were expecting. And I know we've talked about multiple things, so I understand your frustration if you're frustrated with me. But then you'd have like another compression here going probably into Friday. I'd be curious to see if this, like, what this did going into that week, if this were to happen. You know? Like, does it finally, like, change right here, like in the middle, before that Tuesday marker shows up? Does it break the habit, you know, and get on top of it instead of below it? That kind of deal. A lot of question marks. It does look right, because there would have to be a change at some point. So maybe it's so subtle that we barely even like notice it. Where does this creek go right now? For the record, I hope this doesn't happen for our sake. Because I don't really want this to happen, but I get the feeling the change would have to be pretty dramatic. Like something would have to seriously shift here. Like this doesn't even go to a lower low kind of thing. It just fails to go low at all. And then it just breaks out. Yep. And there would have to be like an SOS kind of deal anyways. So going into Tuesday, it may look kind of crappy because I don't like to see that up thrust. But it may be very fine. So this is like an iteration downward that could happen. I don't really want to keep all this stuff on the chart, so I'm going to get rid of it. But for lack of a better explanation for now, I think this is probable actually. That's 265. That jumps the creek 265 right there before that Tuesday. Yep. And then Tuesday. In this model, that's how it would look. And Tuesday it would just take off. This changes things. It changed the angle of the rotation, obviously. But what we could do is if it does take that long, is just take it one step at a time, and if it goes there, it goes there, and then we'll wait and see what happens. I think, I don't know if I had an epiphany. I think I just had like moments of clarity today because there was some things that were a little confusing and they came into better focus today. This doesn't really do much to like completely and totally change anything. It's just timing. It's different. And I think there's a bit of a confusing element here with maybe looking at something like a, fractal iteration that, what is that? Why is that even there? That's not the right thing. That's just a copy of itself. Oh, that's the, yeah, that's weird. That's right. I know why that was there. I was like, why is that there? Yeah, I think one of the problems with maybe using a bars pattern to try to estimate timing, there's probably more than one problem with that, but one of the problems would be the idea that it's going to be somehow like super accurate, but you're missing certain elements. They're just not there. And there's no doubt in my mind that that's, potentially correct in terms of where those are. Numerically, I think they're in the right spot, but like, systematically, I think they're in the right spot. Like that breakdown's in the right place. The rest of it's not consistent, so I don't know. It'd be really difficult to sort of prove the point that, oh, it's got to do this or it's got to do that, when largely it's not that consistent. So it's very close, but I wouldn't suggest that this is like a good method for timing. And even if it was, you would say like, again, maybe the following day, maybe the 15th. I don't know. It really looks like tomorrow, but that doesn't seem reasonable to me. We haven't had that backup. I think we're trying to do it right now. It'd probably be better to look at this and just consider this as like a rough estimation of where that low might be here by about a day or so. So that looks like Wednesday the 14th, Thursday. So if anything, if you were going to use that, you would say that's probably where the downside is. And then Monday, unless you think it's going to run on a Friday, and then Monday is a possible upside, right? That would be a way of maybe being a little bit more reasonable with that. And then I still think you need to have that on balance breakout. So hard to see that happening if this drops. Is there like a creek here maybe? That one's already checked. That jumped up and over. So that looks pretty good. That's done. The next layer is like right there. It's the same idea that we were just doing. We're doing it on balance volume. Right. So, I mean, if it has a minor pullback and it's not a big deal, then it may just go back down to here. It's hard for me to see it unless it comes up Friday. You know? So what would that look like? Maybe like it doesn't lose 265. It changes a lot, but it doesn't lose 265. It's like 265 or 264. I mean, it could be a weakness there. That's fine. It doesn't matter. Then Thursday into Friday. Friday breaks out. And it would have to like come back down. So it's like an SOS into the following day. That's what would have to happen here. Yep. I mean, it doesn't seem super likely, just being honest. I'm not saying that all these timing things are all wrong. I think one of them will obviously be right if we're right. And in the end, if you're smart about the way you accumulate it or whatever, you're probably going to make money on it. That's up to you. That's not up to me. But this is not, I don't know. This is not very normal. I'm trying to figure out like what exactly would be the purpose of dropping here just to go there. Again, I talked about the 265 before. I guess just making the higher high and not making a lower low. Because if you make a lower low, you're going to come down again. But if you don't, it's just a double bottom. So you can't make a lower low there. Yeah, maybe the goal is just to get the double bottom. The backup. So it's advanced, drops down, and then goes into SOS by going back through the top here Friday. So if you're looking for a Monday run, they may not give it to you. I mean, they may not give you this information. They didn't do it in April. What they did in April was more like a final buy-in. So they did something like this where they dropped it down. It was like a spring. It never came back up. It just sat there. And you wouldn't have known. You just had to kind of like see that was a spring already. So they just iterated it again, basically, is what I'm trying to say. They drop it down, do the same thing, but they did it on top of the marker. And the thing about this is kind of genius is that this doesn't really give away anything because it's easy to see that as a hook for a drop or just rip in after hours and just open up Monday up here do a quick dip and then run. And that's what happened in 2000. Frankly, it's what happened in 2024. They didn't even give you the... It was pretty wild. They didn't give us any kind of breakout. We just saw the result of the breakout, which was like a gap up. And then it pulled back. Only for a bit, you know what I mean? In regular trading hours, and then just like took off. So either of those would be acceptable in my mind as a potential run up. I don't think there's much else that I would look for here for a run up. Those would be it. And there's one more thing, I guess, with the accumulation. Then I'm going to call it quits. My kiddo's going to be home soon. And I got to fix this stupid fence. Sorry, guys. Didn't mean to say that. But I was like working on this fence and trying to fix it. And pain in the butt, man. First of all, fences are super heavy. Wooden fences. So working on it by yourself is like a nightmare. So I've been using ropes, which has been very helpful. Then I've got these like sinking poles that are all wobbly. Nothing lines up. So I'm going to have this like zigzaggy fence. But I had to put new like pilings in. I didn't have a choice. I have to be there. There's nothing to hold up. The other wood like rotted out. I don't know. In the end, I probably could have just replaced it, but I thought I could do it without replacing it completely. It's complicated. There was a guy that did the fence before, and he didn't replace them, so it like aesthetically already looks like garbage. This is already broken out on the hourly here. Looks good. So if this is a buy-in where this is like pumping, letting go, pumping, letting go, pumping, letting go, this is the only place I see like a real weakness right here. It definitely went lower there, which is strange. But then the rest of this is not. That's the earnings pump and dump. I feel like they're trying to do that thing again. They're like faking us out. It's just like what happened in 2000 or in like the December, where it went up and down and then it just reset. Because to me, this is not good. The fact that this went lower is very odd. It's trying to set up something for later, like a drop down that goes low. An ascending accumulation needs to hold its own. It just does. Maybe they're just trying to get back to 264 or something silly. And then they'll rebound on 265. And like catch that again. Super strange. Minute numbers, but maybe. An ascending accumulation usually does not break itself, and it definitely doesn't break the middle, which is what this looks like to me. So again, I'm a little bit put off by it. I wonder if that's the goal right there. You guys are like, it's an ascending accumulation. It's bullish. Well, to a degree. Yeah, that's it right there. That's where it went down too. And then on the on balance, that looks more like where that low is here. Let me just check real quick. So weird. So it was like delayed. This is an hourly thing though. It actually didn't hit that bottom till there. Well, there's only one more wick up here. It's this guy. That's closer. That seems right. That seems more in line with what we expect. This level. That weird 1, 2, 3 right there. Right at 270. I think 270 was that floor, so even more so. And it's that little prelim. All right, 270 is even better. I know you guys are probably you don't care that much if it goes to a goes this week versus next week. Some of you don't care, but usually, yeah, I don't know. I might have already broken down. It was like right there. Usually, when this goes like parabolic like this, if it's an ascending accumulation, the last trajectory where the breakdown happens, this is this guy. It has to be that fast. This is the only way I can see it going this week, is it drops to like 270. Maybe it slumps a bit, and then Thursday or Friday it goes up. Did we have a Thursday breakout in March 2022? We might have. I still can't see this leaving. I mean, you could do that. It's the same idea. It's just faster. I can't remember. There's not that many times where I think we've had a Thursday breakout, but for some reason that 2022, I mean, maybe there's more than one where we have, but that 2022 makes me think about, I'm trying to think when that day was. I think it was March 22nd, 2022. Got a pretty good memory for it. I don't think that it was Thursday. I think it was a Tuesday. Yeah, it was like a Tuesday. It looked really bearish on that Friday into Monday. And then it went really bullish really fast. It's pretty simple. This just backed up to the creek and then took off. There's some mild comparative similarities here because of this. When this comes back up, it goes to a higher push and then it comes back down. And that's the creek check as this at the same time. So there's like a really simple comparison that can be made there. And then it's breaking like a bigger creek as well, which is again what we'd want to see on the big picture here, right? We'd want to see that break right there. So like there is some similarities here. It's not like perfect. But in terms of that kind of bottom model, and this had fairly low volume except for the low. I mean, this was very low volume coming up till the very end when it finally left. Well, let's just see. I don't know. None of this stuff looks the same to me, so. Like that's super far down. It's way down here. It's just a very low creek. There's another possibility there. And like we already did this one, but it's kind of getting back to the same things. Really just kind of going in circles now. There's clearly like a creek that comes through here. I can see it, but I can't really determine if like it's this guy. Like right there. I can't really determine like how far down. That's like the tangent on it. That's as good as it's going to get, I think. Yeah, I think that's as good as it's going to get. Sorry. It's not quite a straight line, which is bothersome. It's like an arc. But it's in the right place. You know, it doesn't have to be that this doesn't come below 265. I said that a minute ago, but then I thought about it and I was like, well, there are breakdowns there for sure. It couldn't stay below 265. That's a given. But it could potentially go below it and get like a higher low. It's just that the immediate reaction has to be back up. If you're going to do like a big sell-off, yeah, it'd have to be back up over 265. Like it couldn't stay down there comfortably. It would have to get back above that level here. But could it go back? Well, yeah, I mean, if they think there's a need and they did widen it here, there may be a need to come back to something earlier. Maybe it's even this guy. They checked that. I don't know. That got checked twice. Is it this one? This never got checked. This 260. I'm going to zoom in on that area. No, not since leaving. 260 didn't get checked. This looks like it does because it hits it, but it actually used that resistance. It just broke it. This goes back through it again and checks the 257 mark. But nothing actually tests that low. So that seems to be what might be at the aim here. It really does. It's a strange one. Strange to check there without, because you've already kind of gone through that. That may be necessary. What else is there? I don't know. There's no gaps. I don't see anything that looks like a gap. Nope, there is a gap. It's like 257. So did this fill the gap? Yes, this did fill the gap, so that's done. There's a gap fill, unless they just need a double bottom. Just keep going. Well, I don't think they need this, unless they just need this. I'm just trying to find out what in the beginning was missed. Something was missed. I mean, aside from like the obvious, you know, let's just go to the below the floor. I was trying to determine if there was something else maybe missed. Let me see if there's a retracement here. We're a bit at odds with 252. Yep. I don't get it personally, but I'm not also really that concerned about it. 260 seems really good to me. Like that 260 to 262 area, that seems the best. But I don't think that it has to be. I mean, technically, we're talking about possibility of even coming lower, but I think that there's. It's like, of course, it's like split right between the two. This is dumb. This is a waste of time. This is an S curve. So 50% retracement is that 269 level, 270. Probably a 618 is right here. This goes below the bottom, so this obviously goes below that previous low, so that's different. It changes the game a little bit. That would be a weakness, because at this point, if you go up above the top, and you have, and then you come back to the low, 252, that it has to be seen as a sign of weakness, even if it did advance, because it's made a bottom and then made an advancement. If it reverses that, it's usually going to drop. The same would be true back here when this dropped below. So it would be like, look out below, you know, like we're coming down and drops below that previous floor. So that would not bode well. That would put us on the other path, I think. But there is a reasonable zone here of like this area. I think it's totally possible that if we don't drop that, we could be running next week. Totally possible. I haven't really looked at, and by the way, when I say running, I mean like a really fast run with followed by mostly downside. It would be very experiential. It wouldn't have like a lot of days. It'd be pretty much like one and done hardcore days, and then yeah, pretty much just like rip. It looks like it's gonna go. It's trying to do that thing where it's like holding on. It's curving down. See the RSI curving down, even though like the price is curving up. There could be like an up thrust, but I feel like it's ready to go. It's already lost this. I had this drawn up before yesterday, I think. It lost this guy already. It's walking down. So it's doing that thing, you know. But that's okay, because once you get to that point, I think it's okay, because once you get to that point, I think you're in a position of strength if this is higher, especially if this comes down. I think we'd be in a pretty good spot going into the next week. Worst case scenario here isn't even that bad. It just takes longer. I don't know. This is complicated. There could be one more push up here. It's just the way this is built hasn't made like a second hook to this 50 mark, so I don't know. May not, but see how it's done that before? It's like backed up to it right here. This one didn't. It just kind of drove through and then popped. Maybe that's a good thing. It'd probably be better anyways for us to see this like drive down and then just pop like this one did. Just kind of go low and then boom, right back up to the top like this one. But in this time it would be outside of all the creeks. It's kind of a similar motion. Sure, why not? I wouldn't mind that. Slide here and then pop. I was saying something about this and I didn't really get to it, and I don't think I will, but basically like if this is really, really bullish and it happens to like fly to the moon, it'll interact with this line. Sometimes it even jumps it, like it goes above that because it goes back to the previous model, and it just depends. We're not there yet. No, I don't think it's necessarily going to go to 5. I feel like 430 to 485 is probably the high marks. If it goes to 5, maybe it does it in extended hours. If it goes to 5 in regular trading hours, you can hold it against me and say that you didn't think it was likely and it did it. But I just got to say, like, there's not a lot of reason for it. There's a gap there, but that's not really a great reason. You can fill that gap way later. You don't have to do it now. There's a lot of other gaps way up high, too. I don't think we're going to fill right now. So, yeah, I think reasonably speaking, 312, you could see 430. And then I'm personally just going to be watching on balance. And if it hits those markers, then I think we're going to be done, you know. That's actually a nice 50-50 right there. This one from like 265 up through the top there is a really nice 50-50. That works very well. I don't think you're going to experience a lot of this, but I've already said that. But I think, I really don't. I think we're going to see it. If it moves, I'd be surprised if we did that pump and stop method. I really think this is going to be like a breakneck speed again. And it's probably not going to give us a lot of opportunity to trade. There's maybe going to be a day or two of trading. So, yep. And then the next one's 360. We're very close, y'all. I'll just say that. This seems kind of obvious at this point. With all the work we've done, it may be like, yeah, there could be some other drops here and stuff, but I think we're really, really close. I genuinely think my biggest concern right now is just stopping short of something much bigger, you know? Like this kind of business where you just kind of don't go high. That would be frustrating. But I do think there's enough of a reason that we should go ahead and just finish it. Finish the extension. Just get there. I guess the only major problem that we might run into is just screwing us over with something like extended hours. I do worry that we're gonna see that 430, but then it's gonna open at like 367 or 376 or something like that, and we won't actually see it. You know, I would hate that for us, but it is what it is. I'm mildly concerned that happens. There's some kind of a crap situation where it jumps in like an extended hours time period and then drops. All right, well, we've got a lot of models. I think we have too many. We've got too much to go off of. We got a lot of information. We just got time, so we just got to wait. I did not look at GME. It might give us some more information, but I'm not going to do that today. Maybe tomorrow. Probably not going to be on the stream again till the afternoon tomorrow. So it'd be an afternoon stream. Just got to do stuff in the morning. So I got a meeting, and I'm probably going to end up working on the fence tomorrow. I think it's like 97 today. I don't think I'm going to go outside for very long. Maybe a little bit. Mosquitoes are also awful right now. So we've got a few different setups that I think would be very sort of checking boxes would be very good. I'm not particularly concerned. I think my biggest concern is this idea of delaying a run until the end of the month. That's the biggest concern I have right now. I personally do think that we're going to get this up thrust, though. I think it's going to happen. I'm just not sure about that drop. So we'll see. Yes, we will, Booksy. Yes, we will. Somebody should buy me a TV. I'm joking. I'm joking. Uh-oh, he's starting to ask for stuff. This is how it starts. I'll never ask for anything from you guys unless you want to give it. That's your call. I think it'd be pretty horrible to be like, buy me a TV, man. Yeah, that's true. But if you played that big boom in the SPY, then I think you're probably sitting pretty. You know, you've got some cash on hand. This looks really good. It still looks like tomorrow, which doesn't make any sense. Which I just cannot... I can't stress enough how silly that makes me feel. Because I'm like, it should not be like Tuesday or a Thursday or something like that. But it is a... Maybe that's the pivot, you know? That's the low. I've said that before. Sometimes these are misleading. Make you think that that's the high. And it's like the pivot point. And directionally, we also don't have like a perfect 20/20 vision on this. You kind of have to take what you get. Don't throw a fit. So if we don't get the perfect angles, it's like, well, that's all you got. So hot dang. It should be there today, man. Well, according to this triangulation, at what point do we just say it's not going, Booksy? Never. You never say it's not going? Yes, never. Well, the thing is like, yeah, I mean, at some point you'd have to say it's just not going to go. That's 15 on the 15-minute time frame. That is absolutely like Wednesday. That's funny. I bet I won't be streaming and it'll be like rocketing. That'd be hilarious. He's already asking for things, people. I'm just kidding, guys. I don't need anything. I need to make good money, but I mean, that's just for my family. I don't need material junk. Not yet. Maybe not ever. Where's that marker at? I'm cautioned. I would be cautious about this one. These sometimes do represent bottoms, though. So maybe it's already in a shallow S-curve, Booksy. Look at it. That would be so cool if it was already in a shallow S-curve. I'd be super confused by it, but it could be. It's doing it right now. Looks like it's going to S-curve, doesn't it? I'm sure bears are like, it's going down, folks. I don't know. There's still lows it could hit, so I don't really care. I just don't. If it were already in a shallow S-curve, what we would see is like, you'd see it like break here, and then tomorrow it would just go. I don't know how this even would happen, frankly, in like one night. It doesn't make any sense. But it would like go up. If that were like a pivot on the bottom, it'd go up to here, and then it would do the same thing we're saying over there. You'd have like an SOS. And then you'd go back up, and you'd come back down, and then you'd like rocket. Take off. And then it's all the same. All right, I got to go. We'll talk to you guys tomorrow. Yes, I do have a group. You're more than welcome to join it, but I gotta go for now, so I'll share it with you tomorrow.